Nice job. I want a JW. Andy, Paul, welcome back. Nice to have you back in here. Miss Debbie's in the house. Gino, hanging out. Good to have you guys. Hope everyone's doing well today. Man, I'll tell you what, Mr. Flowers, I woke up at 2:30 a.m. this morning thinking about how to make your life easy. It's funny. This is how my brain works. Good morning, Cav. So, guys, we're going to take a different approach to the room today. I'm going to wing it. So, be a little patient with me. But, man, we're going to treat this like I am a brand new user. And we're going to do the things that a brand new user should do, which is going to give us the opportunity to take a lot of pictures together. So, if you need help taking pictures, guys, this is your day. We're going to put a lot of pictures into the spreadsheet. So if you need help putting pictures into the spreadsheet, this is your day. And we are going to talk about the patterns, and we're going to go through this. And then, guys, we're going to simulate. We're going to simulate the KISS plan, and we're really just going to focus on keeping it super, super basic. So I'm not even going to use that PowerPoint that I've been using, guys, and we're going to get on. I'm pretty excited about today. My goal is always to make this as easy for you as possible. Good morning, Miss Adriana. My goal is always to be able to keep you guys focused, to keep you guys really thinking about the best of the best. So we're going to do that today, guys. But before we do that, we're going to check news the same way we do every day. So I'm going to give you guys the link to forexfactory.com. You should have this saved on your computer by now. If you're brand new, I would encourage you to save it. Because what forexfactory.com is, it lets me know when something is going to be said that may create this emotional response in the market. So if you were watching at 8:30 a.m. when the core PPI and the PPI and the unemployment claims came out, the market went nuts. The NASDAQ went sideways. The S&P jumped and spiked, and it was really untradeable. I'm not saying wait for the news, and if the core PPI is up 2%, right, or is down 1%, make a decision. You're still trading your patterns, but what happens is when these news releases come out, your patterns happen so quickly that it's difficult to time them out to get in, and a lot of times you can get spiked out and slipped and stuff like that. So 8:30 a.m. news is in the rearview mirror. At 10 a.m. we've got some medium impact. Barkin speaks, and at 101, the 30-year bond auction. And guys, that one has the potential. So we'll be done with class, but now you know where it's at. Everything that I talk about today is going to come from the education page. The first link that I want to share with you guys is the software user guide and instructions. This is your Ninja Trader how-to. And guys, I'm not going to lie to you. I was a 100% tech failure today. Excuse me, I'm so sorry. I'm trying to build higher time frames on crude oil in efforts to slow it down, to create an even slower study tool for you guys. Yesterday, somebody told me, man, Mark, it's hard to catch these things live. And a lot of the stuff that I take for granted, being able to read my charts very quickly, not everybody has. So I'm trying to build this higher time frame, and my poor brother, I'm like, I need it to do this. I want it to do that. I need it to do this. And he's like, dude, just let me get coffee in me, please. And I came here and I tried to figure things out. Good morning, Muser. And sometimes, guys, I'm just not that good at tech, and I rely on other people. So my brother doesn't know this, but he's going to build me the stuff that I need. I'll let him know after classroom. But if you have tech problems, guys, it's not your job to be good at tech. Is exactly where I'm going with this. It's your job to learn to read indicators. You lost $300 on crude oil at 8:31 a.m. Cruel oil, I like that even better. Zorro, did it spike because of news, or did you just take the wrong trade? It's okay, right? We all lose, guys. The key is making sure that we lose for the right reasons. So if you have a Ninja Trader question, guys, if you have a tech question about it, here's most of your answers. But if you can't get that answer, if it's not telling you what you need to know, reach out to Jason, please. It's okay to not be good at all the tech stuff. I stink at it, and I know that I stink at it. So because of that, I reach out for help. Guys, this is the glossary of commonly used terms. Hopefully that's big enough. I tried to make my screen a little bigger so it's easy for you guys to read. This is at the bottom of the software user guide. I do need to make a note to tell John to put it back on the tutorial section. But you're going to hear a lot of different things in the room. You're going to hear one-to-ones and small swing one-to-ones and divergence and reversal bar markers. Guys, this is just kind of the, hey, let me go through and see what they're saying. Bingo, I love it when people type that in the room. It means that you just hit your profit target. Runners, when they really go. Fear of missing out, we all know that one, right? Your rules, the rules that we're about to discuss, are going to help alleviate that fear of missing out. And then post pics or questions, that kind of makes the room do what the room does, right? The more you post, guys, the quicker you're going to get to where you want to be. But the one that I really want to share with you guys, and the one that we're going to absolutely dissect this morning, is the high probability trend trade. And this is a trade that each indicator on every chart agrees for the rules of the trade. And typically this is when all the triggers are the strongest and there's no termination conditions and there's no trouble spots between your entry and your target. And guys, this high probability trend trade, so for you newer guys, Paul, this is a trade that typically wins 70 to 80% of the time. This is a trade that creates an enormous amount of confidence just because of that win percentage. And this is a trade that teaches you to read your charts, guys. And this is really my focus, is getting you guys to where you become chart readers. And I'm going to go to the tutorial section for this. Because once you're a chart reader, once you're comfortable looking at your indicators and understanding what they're telling you, the world is your oyster, guys. And it's amazing because chart reading is about 90% of what you're going to do during the day. Chart reading is going to tell you when advantages are present. Chart reading is going to tell you when your rules are met. Chart reading is going to allow you to manage trades. And your chart reading, once you get comfortable with it, and the high probability trend trade will make you comfortable with it, you're going to understand where the market is likely to continue, where it's likely to go, and where it's likely to stop. And we're going to take this ability and turn it into what we call a high probability trend trade. And a high probability trend trade is only 3 rules. Simplicity is huge for me, guys. And these 3 rules, each rule provides an advantage. So the recipe for a high probability trend trade is momentum plus a clear path plus an entry area. And when you have these 3 advantages, and when you learn to speak to yourself in terms of advantages on your chart, this is what I see. These are the expectations. Are my rules met? Yes, I have a trade. And we're going to focus a lot on these. And guys, I'm going to drop pictures in the room, and I'm not going to use that PowerPoint. We're going to focus on these 3 rules, guys. We're going to focus on these 3 advantages and being able to recognize them at a moment's notice. And we're going to keep it simple. We're going to look for these 2 advantages, or these 3 advantages, on only 2 charts. There are more charts that are available. There are different kinds of charts. There's higher time frames. There's lower time frames. Guys, there are billions of combinations, and there's tons of indicators that you can throw on a chart. I'm telling you right now, from the bottom of my heart, you don't need them as a brand new user. It's just going to confuse you, and it will cloud your judgment. So keep it very, very simple. 3 rules on only 2 charts. Your large chart is a slow moving chart. It is a broad stroke of a brush, guys. It gives you the general opinion of the market, what the people in charge want to have happen. The most current bar on the large chart, guys, will define direction, momentum, in the areas that may be problematic. And I'm telling you, 1 bar on this slow moving chart gives you 66.6% of your advantages. Rule number 1 is met on the large chart. You will have the advantage of momentum if it is true. Rule number 2 is met on the large chart. You will have the advantage of a clear path, nothing between you and your targets, if you allow this rule to be true before you ever go to the small chart and look for an entry. And the small chart, guys, is going to refine the broad stroke of a brush. It's literally going to be able to take that 1 bar, that most current bar, and it is going to whittle it down. I love that phrase. Into about 15 to 30 bars sometimes. So when the large chart is telling you that everything is going down, and the large chart is telling you that the momentum is super strong, and the large chart says, hey, guess what? There's nothing in the way. You're going to turn your attention to the small chart, and we're going to take this one bar that gives us all that amazing information, and we are going to turn it into a retracement, an entry, and then hopefully we're going to watch that thing go with everything that the large chart says. So we use this refinement process. Good morning, Miss Cindy. And what it does for us is it allows us to reduce our risk dramatically. It allows us to increase our profit potential exponentially, guys. And your third rule is going to get you into the market. Your third rule is the one that's designed to have you pinpointing exactly where the market is most likely to continue. And again, guys, we're going to talk about the high probability trend trade first. We're going to learn the trigger line and the Fibonacci rules for when it's okay to trade. We're going to go through and get your spreadsheets ready, guys. We're going to fill up our spreadsheets today. We're going to go back and we're going every day, Cindy. We're going to go back and we're going to take all the pictures that we can find of these three advantages. And we're going to put them into our spreadsheet, guys. And that's kind of my segue into reminding you, if you really want to be a trader, be a waiter first. Learn how to wait. Learn how to be patient. Learn how to be a chart reader. Because when you are a chart reader, you can look at your indicators and you can create expectations. Because these patterns that we teach, guys, they repeat themselves every day. They repeat themselves on every market. A lot of the looks even repeat themselves on different time frames, different looking charts. So we're gonna focus on the rules for the high probability trend trade. You're gonna know when it's okay to trade because your rules are met. There's no other reason to get into a trade. You're gonna simulate, practice. You're gonna go back. We're gonna take pictures. Post your trades in the classroom, guys. Post your trades in the room. Everything you do, and you're gonna be tempted to hide losers. I'm gonna tell you right now. You're going to say to yourself, oh, I can't believe I lost that trade. I feel so stupid. I don't want anyone to see it. Guys, sometimes losers are good losers. Sometimes losers have all the advantages. And sometimes a little discussion about what you read on your chart, what your chart read was, gives me the opportunity to work with you, to fix you, to point you in the right direction. And hopefully we can work together to get you to stop making mistakes. And some people will get it on day one, and some people will get it on day 1,000. And everybody's different. Don't put any pressure on yourself to be good at this today or tomorrow. Do it at your own pace, right? But the quickest way to get there is post everything that you see and everything you do in class. The second is to use the spreadsheet, guys. Nexgen gave you the spreadsheet. It is in your Nexgen study picks folder, but I'm going to share mine with you, because I update mine almost every day. So every day I like to share it. You guys can save it over your old one. But there's 4 tabs on this spreadsheet. The first tab is the copy of your tracking, guys. And the copy of your tracking it's a trade journal. That's all it is. It's every time you take a trade, you're going to go through and you're going to drop it in the room. And when you drop it in the room, or not the room, you're going to get feedback. And after that feedback, you're going to put it into your spreadsheet, and you're going to talk about the type of trade that you took and how you felt and what the rules were met or not met and the results. And then there's a notes section for the feedback that you receive in class. And if every morning you pour a big cup of coffee or a Diet Coke or Dr. Pepper, or whatever you do, and you study the previous day's trades, and you ask yourself what worked and what didn't work, what felt easy, right? What kept you relaxed? A lot of times I'll ask you guys, hey, how did you feel in that trade? And when the rules are met, you guys tell me that it was pretty relaxing, that it wasn't stressful at all. Your pulse didn't go up, your palms didn't sweat. And then the ones that make you nervous, that feel forced, typically you know you're breaking your rules. And when you know you're breaking your rules, guys, you get nervous and you start managing differently, and you start hoping and wishing and wanting, and there's just no reason to do that. You will discover that you're going to be entirely too talented with chart reading to have to wish trades work, to have to hope that trades work. But that little study each and every morning, guys, it sets you up for the day. And it is going to really help you recognize patterns that are bringing you success. And it's also going to help you recognize patterns that may be harming you, maybe things that you do. Cindy mentioned today is not a good day to enter it into a termination condition. So Cindy's thing, whatever trade she took, she's going to put in here and she's going to say, don't trade into termination conditions, silly. It doesn't suit you well. The third tab is your favorite looks. This is when your rules are met. This is when all the advantages are present. This is where you're going to take a picture of what it looks like to take that highest probability trade, to take that trade that typically wins 70 to 80% of the time. We focus on trade entries. The first hour is dedicated to trade entries, to understanding the advantages and being able to get into the market where it's most likely to continue. From great entries comes the need to manage. I'm going to give you a very solid plan for entries. I'm going to give you a very concrete plan for management for the new user, but you're going to begin to take pictures so that you can learn to hold for bigger moves or learn how to get out of trades when they're not working via your chart reading. There's a lot of patterns that repeat themselves. We won't call this chart reading things. Let's change this. Patterns that repeat all the time. And there's also one that's dedicated to termination conditions. So Cindy's homework, her penance for the day, is to go back and take 10 pictures of termination conditions and write on a chart what it means to her when they reach them. And then maybe you won't do it tomorrow, right? That's what I had to do, Cindy. This used to be the Mark Novak always trades into these section. That was my biggest problem, was termination conditions. I didn't believe it. I didn't believe that they would stop the market, and I lost a lot of money. And to be honest with you, I didn't realize I was doing it until I presented my charts in class, and my brother was teaching the class back then. And he's like, all right, Mark, how many times are you going to trade into termination conditions expecting them to break? How many times are you going to rob yourself of this wonderful advantage of knowing exactly where the market is likely to stop, hoping that they break? And man, when your brother scolds you, it hurts a little bit. So I filled this up 10 times over. The fourth tab, ladies and gentlemen, is where I've done an awful lot of work based off of your work. There's about 300 pictures of you guys using the software. Embracing the advantages, finding great entries, all that wonderful stuff in here. There's even perfect setups that didn't work because I am such a believer that when I have odds favorable momentum, when I have a clear path, and when I have an entry area, that this is my absolute best of the best. And I'll police myself and I'll say to myself, if I take this trade and it loses, well, then the trading gods just had other things in store for me. But I know that if I take this exact same look 10 times, I'm likely to win 7 of them. And that creates a statistical advantage. And that is the reason for entering a trade. So go through and study these looks. There are long and short sequences for entries for high probability trend trades. For you NASDAQ junkies, there's a whole section on the NASDAQ here. Guys, the NASDAQ moves about 10 times faster than crude oil or the S&P. The NASDAQ has a couple little nuances on entries that will absolutely ruin your day if you don't pay attention to them or know them. The NASDAQ is not an easy market to trade. If you can't make great decisions based on your chart reading in a fraction of a second, the NASDAQ will chew you up and spit you out. This is why we're going to focus heavily on crude oil. We're going to focus heavily on the S&P, and we're going to slow things down so recognition becomes a little easier. Yesterday, we took a short trade on simulator in class that fit the rules. We had 11 minutes between our large chart rules being met and our actual entry. We had 11 minutes to make sure that our rules were met, guys. And you'll get to the point to where you'll understand what you're looking for in a matter of seconds if you go through and study these looks and commit them to memory. And that is kind of the next part. Simulate, practice the correct rules. Try not to break your rules. And then we're going to simplify. We're going to talk about high probability trend trades. I'm going to give you the addition of a medium probability trend trade in there where there's a little problem going on. It's going to rely on your ability to read charts to recognize that problem and to manage around it. But you've got to learn the looks so that they're easy, guys. And that's where taking pictures is huge. And we take pictures. Everybody has TechSmith Capture. Everybody got this when you downloaded the software. It is on your computer. Type TechSmith Capture into the search bar, and this will come up, this little yellow icon. We're going to run this thing into the ground today. You have to know the looks so they're easy. The looks become easy when you've seen them 100 times. Odds favorable, momentum, clear paths, all of this becomes really simple to recognize if you take the time to learn them, to recognize the looks. And that's where the second tab comes in. And I skip back to this because this is what we're going to do today, guys, is we're going to take the individual pieces of the high probability trend trade, and we're going to take 10 pictures of each piece of the rules being met, and then we're going to piece it together into a trade. So our first hour, maybe our first hour and a half, hell, I don't know, is going to be more dedicated to finding strong triggers, a clear path, and an entry than it is going through this, look at this picture, this is what it means, blah, 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 blah. So I'm going to take a totally different approach today. And we're going to start with the idea that it's only three advantages to get us into a trade, that there's only 3 things that we need to get into a trade. And rule number 1 says that the large chart must have strong triggers, guys. That is really the only way that I even start looking for a trade, is if my large chart has strong triggers. So let's go to crude oil. And guys, I'm just going to blow up my large chart and I'm going to make it huge. And this is our first picture. And I want you guys taking these pictures with me. If you have capture software, click that big red button. And this is going to let you click and drag. So I'm going to click up here and I'm going to drag right here. And this is all I'm getting. And I'm going to hit my camera button. And once I do that, it's going to give me a picture. I'm going to blow this up. And guys, this is my image preview. In a long, in an uptrend. So I'm going to use my call out and I'm going to say trend is up. Background is green. And guys, this is your first lesson, is the color of the background is going to dictate which direction the market is moving on the large chart. If the background is green, the market is going up, and that market going up means that I should only be looking for rules to be met for high probability trend trades long. In an uptrend, strong triggers, rule number 1 means that my small triggers and my large triggers are green as well. Small triggers, we're going to do this too. We're going to give you guys a little roadmap. Small triggers are a faster moving indicator. Large triggers are a slower moving average, and they work together to create momentum. So the way they create momentum is that when the smalls are above and away from the large, this is strong triggers. And what strong triggers means to me, what strong triggers means to you, is that this is a market that is likely to continue in the direction of the trend, that this is a market that has so much force behind it, it is likely to continue. The odds are favorable for the market to continue up. Odds favorable momentum is what you're going to hear in class all day long, guys. OFM, odds favorable momentum. When I have odds favorable momentum to the upside, we're going to use that smaller, faster chart to sell Fibonacci support. You're going to see it on this larger, slower chart as a tail or a wick. We're not going to trade these tails or wicks. We're going to use a smaller, faster chart to pinpoint exactly where that market is most likely to continue. So guys, this is strong triggers to the upside. Can you give me a Y in the room if it makes sense? Separation between the small and the large. Everything is the same color, it's wide, it's angled in the direction of the trend. This is the best of the best look. This lets me know that I have the advantage of momentum. So I'm going to click upload at the bottom right hand corner, and it's going to give me this picture, and it's going to give me a link to it, guys. And if I copy that picture, my first job as a brand new student is to drop it in the room and just say, hey Mark, am I reading this right? Mark, is that odds favorable? Did I do this the way I need to do it? If that confirmation is there, I want you to go to the second tab, Strong Triggers, and we're going to paste. And look how it says app, screencast.com, blah, 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 blah. That's my new word for the day. Guys, this is great, and you can follow this link, but you can make it easier. If you go to the Insert tab and then go to the link button, it's going to turn this link into a hyperlink. So I put that app, that screencast address in there, and right here, I'm just going to call it, I don't know, Strong Up. And now I've added one to the list. So what I've done is I have taken a picture, I have created recognition, I have written the rules for why it's strong triggers, and now I'm going to go find the next one, guys. And now the background is red. And in this red background, it means that I'm in a downtrend. So I'm reinforcing the rules. And then once again, I'm going to draw an arrow. And I'm going to define what creates strong trigger lines. Smalls below large, both wide, in direction, and space between. This is strong triggers. I have odds favorable momentum. Rule 1 met. Whoop, I hit the wrong button. Rule 1 met. So guys, is everybody cool with the look for strong triggers to the downside? Small triggers below the large triggers, they're both wide, they're both angled in the direction of the trend. This space lets me know that this is the best of the best to buy Fibonacci resistance on a smaller, faster chart. I don't have any of those tails or wicks on the way down, therefore there wasn't a potential entry, but it doesn't change the idea that strong triggers were present. So once again, I'm going to upload, and I'm going to take that picture, and I'm going to drop it in the room, and I'm going to say, hey, Mart, am I doing this right? And if we are, then I'm going to come to my strong triggers again, and I'm going to create that hyperlink, and I'm going to call it strong down. And guys, this is rule number 1. Rule number 1 is met on the large chart. Rule number 1 says strong triggers. It has to be there. If you look at the 2-chart process, you'll notice that on the most current bar, you'll be able to understand whether or not you have strong triggers or not. You'll be able to understand whether there is separation, whether or not all the colors match, whether or not they're wide and angled in the direction of the trend. And guys, I'm telling you, if you go back and you start taking these pictures, what's going to happen for you is you're committing these looks to memory. You're taking any indecision out of the equation, and you're saying to yourself, not, oh, that's just strong triggers. You're reminding yourself that smalls below large, wide, in direction of trend. The space between means strong triggers. Odds favorable momentum. Rule 1 met. So guys, I'm going to ask you, and feel free to tell me no if you believe that. If you went through and you spent 25 pictures worth of energy identifying these, uploading them, taking that picture and dropping it into your spreadsheet, is there any doubt in anybody's mind that by the end of 25 pictures, you would probably be pretty good at recognizing odds favorable momentum? You'd be really good at understanding that sometimes it's not there, sometimes it is. And there's another picture, guys. There's that odds favorable. There's one of those tails. And if you circle it, well, there may have been an opportunity to enter the market there. This is the most current bar. And I want you to see this. Whoops. Strong triggers. Does everybody see it? Let's take one more. Smalls above the large. So we'll call this strong triggers, momentum, Rule 1 met. And then let's do this one too. Let's really reinforce why we're looking for strong triggers. This is the best look to buy Fibonacci support on a smaller chart. So what I'm doing is I'm talking about the looks. I'm discussing the advantages. I'm talking about why I want this picture, why I want this information. And then I'm coming back to my spreadsheet, guys, and I'm dropping it in. And I'm saying to myself, this is it. This is the best of best, strong long, strong up. And that's my look. So, Rob, do more experienced traders, you, JN, take just momentum trades? Nope. I love trend trades, Rob. They're a trade that typically wins 70 to 80% of the time. They're a trade that gave me an enormous amount of confidence through the memory of success. And trend trades, Rob, wouldn't it be ridiculous to skip that because I'm only looking for momentum trades? And isn't that just a momentum trade? Pretty cool, right? So I'm not omitting this one from my plan at all. But as you grow with the software, Rob, as you become a chart reader and you go through and you see these things, you're going to be able to add things to your plan. You're going to be able to add more trades to your plan. But I'm telling you right now, if you can't read your indicators, if you can't recognize momentum and a clear path and the easiest entry area ever, you're going to struggle with momentum trades. They happen 10 times faster. So guys, rule number 1 has been met. Rule number 1 says odds favorable momentum. Rule number 1 says, hey, this is a market that's likely to continue in the direction of the trend. It happens on the large chart. And then also on the large chart, we're going to be able to recognize what we call termination conditions. And what a termination condition is, and let's go through it. Let's take a picture, guys. Let's take a bunch of them because crude oil just reached one. What a termination means is that the market has reached an area that has the potential to stop it. A termination condition, and let's do this real quick first. A termination condition is a Fibonacci-based indicator that may reverse the market. And you're going to be able to understand whether it has the potential to stop the market on a comparison. We are going to compare the T3 trigger strength and location, the same trigger lines that give us momentum. We're going to compare it to the area that has been reached, whether it is blue Fibonacci support, red Fibonacci resistance, yellow 1-to-1s, cyan divergence low line, magenta divergence high lines. And guys, what you're going to see is that when price reaches an area, I'm going to give you the recipe right now. This is one of the ones that's on the list. If price reaches an area, decisions are made by the people who control the market. That's the easiest way to put it. This is where profits are taken. This is where trades are entered. This is where trades are exited, guys. We know about these lines in advance. And if price reaches the area, if your dynamic Renko bars come up and hit that area, that sets off the decision-making process. So, if price reaches the area, if triggers remain below resistance, magenta divergence lines, 1-to-1s, no more long trades. This is an area that may stop the market, create an untradeable bounce, or set off a fight between the people who move the market. So guys, it's a pretty simple recipe, and the recipe absolutely positively never changes. Price reaches an area, and if price reaches an area and the triggers remain below, no more long trades into that area. So I'm going to upload this one, and I'm going to copy that one, and I'm going to go to my spreadsheet, and I'm going to go to termination conditions. And I am going to put this one directly into the termination condition, right? That's the picture that I just took, Haji. And we'll call it a termination. And guys, I want you to see what the market did off that pink line. Pushes all the way down. That is what we call an untradeable bounce. That is something that would have robbed you of your money, that would have pulled you out of the market, that would have ruined your day. Look at it down here. And guys, price created this divergence line. When price reaches it and the triggers remain above, no more short trades, another termination. And if you just scroll back a little bit, you'll be pretty amazed. Price reaches yellow 1-to-1s, the triggers remain below. We know not to go long into that area. Price reaches the divergence low, up it goes. Price reaches resistance, down it goes. Sometimes rule number 2 will define consolidation, and this is a great picture. And if I pull this one up, the recipe never changes. And when the recipe never changes, because consistency is king, guys. So price reaches, no triggers break, no trade. Price reaches, no triggers break, no trade. Price reaches, price reaches, price reaches. Oh my gosh, there's 5 termination conditions in the same area. So rule number 2 says if price reaches an area and the triggers remain above support or below resistance, no trades into that area. Guys, it's the easiest recipe that you will ever recognize because it never changes. The price bars have to reach it, and if the triggers don't break it, rule number 2 isn't met. Is everybody comfortable with this idea? Let's upload it. Whoops. Sorry, let me upload that one. Let me grab that link and let me put it into my spreadsheet, guys, because I need to know when I shouldn't be trading into an area. And what you're going to find is rule number 2 is going to keep you out of an awful lot of trouble. Guys, give me a Y if you're with me. If you're not with me, you're against me, and then we have problems. So guys, if I can't trade into an area, if the price reaches and the triggers don't break, when is an area broken? Well, I'm going to show you. Let's find a good picture of it. I want to find like the perfect picture. Hey, look at that one. That one held pretty good, right? An area is broken. Man. I'm trying to find one without an area behind it, but crude oil has been a little consolidated lately. Here we go. Let's do this. So as we come into this market, price reaches these areas and the trigger lines don't break, and I have to sit on my hand, right? All of my triggers are above support, no short trades. The market's going to continue down, bar by bar. And eventually your small triggers are going to break through areas, guys. Your small triggers are going to lead the way with all that momentum. Strong triggers can break areas, but this is not broken yet. An area is not considered broken until both the small and the large get below the area. So it's a pretty simple recipe. If both the small and the large get below support, support behaves as resistance. The area is broken. The path is clear. Rule number 2 is met. And you're going to see it all the time. Up here at support, we don't know what's going to happen. We choose to sit on our hands. But when the small and the large get through the area of support, the area is now broken. It's the exact same look that we took from the live market. When the area is broken, the path is clear all the way to the next problem. This is when we're going to look for odds favorable momentum. This is when we're going to be able to sell Fibonacci resistance on that smaller, faster chart. So this simple recognition, guys, price comes down. Look at that. The smalls break through support. The large try to. There's a pivot with a loss of momentum. Guys, all this is a loss of momentum. Because the triggers broke the area, it's not really a termination. It might be a little overrun. But the recipe is true when price reaches that divergence low. The triggers remain above. Now this is a termination condition. And guys, if price exceeds and then goes back above, we call that a pivot stop out. And a pivot stop out is a very powerful termination condition. And if a no triggers through termination condition reverses the market, guys, we're going to call this a strong bottom. And a strong bottom is the precursor to the highest probability trend trade that you can take. And these pivot stop outs are even more powerful if they coincide with Fibonacci resistance, if they coincide with support. And TLC, we'll go through it. Don't worry. And nice job posting the losers in the room. Guys, price reaches resistance. The triggers don't break. Sit on your hands. It saves you from a loss as market pushes all the way down to support. Triggers don't follow. They're well above support. It saves you from a short trade loss. Back to resistance, weaker triggers, they're below. Divergence high, the triggers are below. Resistance, the divergences are low. Guys, this is about 90% of your day. 90% is just waiting for the advantages. Eventually, the market reverses off of that termination. We're going to call it a strong top. It gives you odds favorable momentum. That's that same strong trigger look we've been talking about. And then there is one of those tails. Price hasn't reached support yet. The path is clear, the momentum is strong, and that's your entry, guys. That's that highest probability entry. If price goes above and back below, doesn't even have to be a bar, Paul. And you'll see on your large chart, watch this, because I remember seeing one. You'll see on your large chart, let me see where we were. There was like the perfect pivot stop out. Price traded above. But look at this right here, and this is pretty outstanding, guys. Blow that up. You got 2 ticks below that divergence low, guys, and that was enough to reverse the market. This was at 3:25 in the morning. We knew about that divergence low since 6 p.m. the previous day. We knew that this was a line in the sand. We knew that it could be problematic, and we had the recipe to say don't go short into it, even with odds favorable momentum. And guys, if you do a little bit of study, if you go back and you look at these termination conditions and you learn to trust them, there's another one right there, Paul. About 2 ticks through, look at that. Just the loss of momentum wasn't enough to stop the market, but the termination sent it the other direction. Guys, rule number 2 is going to keep you out of so much trouble. Rule number 2 is going to keep you out of consolidating markets. Rule number 2 is going to keep you patient and teach you really to be a waiter, to wait for the best of the best. Because rule number 2, so if it 1 tick above divergence, it can be traded long, theoretically. What do you think about that one, Paul? That one you would have lost. That one you probably would have lost. Probably would have lost this one. There's a good chance you would have lost this one. So theoretically, no, Paul. It's just a termination condition. That's it. It's just a termination condition. And Paul, we're so damn good at what we do, we don't have to be first, right? Price reached support, the triggers didn't break. I know that I'm not going short yet, but man, I'm not going long against this momentum. I'm not going long against the direction of the market. I'm not fighting everything down on my small chart. I'm going to be patient, and I'm going to wait, and I'm going to see if it breaks or if it holds. Yeah, great question. Guys, those are the questions that make you better traders. If it's on your mind, ask it. Odds favorable momentum screams all the way down to yellow 1-to-1s. And when the yellow 1-to-1s are reached, everyone in this room says to themselves, you know what? My triggers are above. I'm not going to go long, or I'm not going to go short. And it keeps you out of a losing trade. So it's not that you made money because of the termination condition. It's that you didn't give up 200 taking the wrong trade. The fight begins, and it goes all the way to resistance, and the triggers remain below, so I can't go long, and I can't go short. And I can't go long without momentum, and I can't go short into termination conditions. And this fight continues, guys, for about 45 minutes. But eventually, this termination condition creates the reversal. From the reversal, I get momentum. And with that momentum, all of my triggers are above resistance. It's now behaving as support. And I'm going to buy Fibonacci support on a smaller, faster chart. And guys, the 90% of your day doing absolutely nothing is going to allow you to completely capitalize and keep every penny that you make on that highest probability trend trade, on that trade that typically wins 70 to 80% of the time. And what you're going to find is that this is difficult at first. If you don't go back and study termination conditions, you're more likely to trade into them. If you don't go back and look at odds favorable momentum and how often the market continues in the direction of that momentum, you're likely to take what we call weaker triggers and hope that the market continues down. This is odds favorable, smalls outside of the large. When the smalls begin to come in, we're losing momentum. When the smalls are swallowed up by the large, guys, anything can happen up or down. And that's where you start to see these bigger retracements. That's where you start to see these key areas holding and reversing the market with these weaker triggers. So all we're doing today so far is we're taking pictures and we are creating an awareness and a belief. And let's get out of the one where we took all the pictures here. Dun, 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 dun. Trying to find the perfect termination condition. There we go. That's a good one. We are creating the belief, the understanding, the recognition that if price reaches an area, if price reaches resistance, the triggers are below, it may stop the market. Rule 2 not met, not a clear path. So guys, all we're doing this morning is we're taking these pictures, we're taking these ideas, we're annotating them, what they mean to us, we're talking about the advantages, we're making sure that we understand when the advantage is gone, because what you're going to be able to do is you're going to be able to trade based off of these advantages. You're going to be able to piece these together and understand when it's time to take a trade. So let's go back to the most current bar. Support still has not broken, ladies and gentlemen. But what do we do? Whoops. When we do have odds favorable momentum, right? And what do we do when we have the potential to break? And I want to show you before we get into entries that there's 3 scenarios for the new user when it comes to termination conditions. There is the scenario where, whoops, there it is, my apologies, where price reaches an area and the triggers remain below resistance and the area is not broken. Therefore, there is no long trade. There is no clear path. Rule number 2 is not met. You've got to be good at this first, knowing when not to trade. And then understanding that when both the small and the large are beyond the area and it hasn't reached the next area, that the path is clear, that rule number 2 is in place. And when I couple that with odds favorable momentum, well, there may be an opportunity to enter the market long, to buy Fibonacci support on a smaller, faster chart. These are high probability looks. Clear path is high probability. No clear path is low probability. Well, this one in the middle, ladies and gentlemen, is our medium probability trade. And this medium probability trade looks like this. The small triggers have smashed through the area. The small triggers have absolutely, positively smashed through the area, 2 to 3 points. The large triggers are lagging though, so we know that the area is not broken. because of the odds favorable momentum, and I can't stress this enough, strong triggers have the ability to break areas. Weak triggers rarely do. But with odds favorable momentum and the small triggers smashing through the area, this area has the potential to break. This area is not broken, and I can't stress that enough. Let me go to my favorite little toy to use in the classroom. There it is. Because both triggers aren't through the area, we don't have a clear path. And if I just cover up that advantage, well, now I know without question that I don't have a high probability scenario. I have what we call a medium probability scenario. And that means that most of the indicators agree with the chart. Odds favorable momentum, right? Maybe the perfect entry area. But an issue exists, and that issue is that my path isn't clear. And when I have a medium probability trade, I'm using my ability to recognize advantages to define that. And I'm telling myself, if I'm in a medium probability scenario without a clear path, I refuse to have a loss of momentum anywhere. And I refuse to not have a clearly defined low risk entry. Because the reality is that I'm hoping this area breaks because of the momentum. So guys, I'm going to give you a plan for taking the perfect trade, and I'm going to give you a plan for taking the almost perfect trade, but we still have to define our entries. And that's where we go to the small chart. But before we do, everybody take a gander at the large chart here. The most current bar says that the market is going up, and it's important that you understand this because new users are tempted to fight the market to be first. You don't have to be first. Your methodology gives you the opportunity to capitalize without ever fighting the people that move the market. Your most current bar says that the odds are favorable for the market to continue up, and it does this with those strong triggers. Small's above the large are wide, the space between. I want you guys to think of this like scissors opening. Do I have a drawing tool? Yeah, I do. So here's one blade of the scissors. Here's the other blade of the scissors. And those scissors have opened, right? And when the scissors are open, we can cut. So use that little reference. Strong triggers are open scissors, and open scissors allow me to cut. They allow me to get work done. And when those scissors are closed, my ability to do good things goes away. So the large chart says up. The large chart says momentum. The large chart says that we haven't reached the area, but it also tells me that I've cleared the previous area, so my path is clear. And my large chart has, without question, told me that rules 1 and 2 are met. And because they're met, I have the advantage of momentum, and I also have the advantage of a clear path. So what I'm going to do is I'm going to define my area for entry now. I'm going to go to the entry rules, and we are going to pinpoint where the market is most likely to continue. During the live market, when the large chart is up, when the large chart has a clear path, when everything says it's time to look for an entry on that smaller, faster chart, that refinement chart, guys, we are going, oops, wrong one. Your small chart's going to look like this. The small chart's going to be screaming in the direction of the trend. The small chart is going to have odds favorable momentum. The small chart is going to have green midbands and blue supports and green triggers. And this is where you're just saying to yourself, it's time to look for an entry. Rule number 3 says that I am going to use a limit order to buy or sell a pullback at an area inside of favorable large triggers. I am going to pinpoint my area so precisely that I'm going to wait for the market to come to me. And then I'm going to buy that market at an area. And an area on the large chart defines problems. On the small chart, it's going to define entries. And the key is I want that area to be inside of the triggers. And ideally, it's inside of favorable large triggers. And favorable large triggers means that on your small chart, on that entry chart, Both your large trigger, the smoother of the two, and your synthetic trigger, the stepped, and your synthetic is just the large from the higher time frame. They're one on top of the other. They're snakes riding piggyback. They are tight, they're concise, they're clear. And these trigger lines are moving averages, ladies and gentlemen, and price tends to return to a moving average. But we don't rely on the moving average to create a bounce, to create continuation. We're going to put areas inside of those moving averages, fibs, midbands, yellow one-to-ones. And you're going to be able to do this and recognize those areas inside of favorable large triggers and say to yourself, this is where the market is most likely to continue. This is where I just pinpointed the best of the best entry. And you're going to be able to do it by waiting for, let me show you one more picture. Sorry, I'm all over the place. My apologies. By letting the people that aren't in charge do their thing. The large chart is a reflection of what the large crowd wants, what the people in charge want, what the people with all the money want. They're going to establish direction. They're going to create momentum. They're going to react at these key areas. There's always a small crowd, and the small crowd loves to fight the large crowd. These guys give us a push, a retracement, a tiny little move counter to the underlying trend. We rely on the small crowd because it's going to allow us to use a limit order to buy or sell a pullback at areas inside of favorable large triggers. So when everything says up, we have to wait for the small crowd to do their thing. And it begins with a reversal bar. And at the time of the reversal bar, guys, I'm just going to build what's called a window of opportunity. I'm going to identify my trigger lines. They should be up. They should be on top of each other. In a long trade, guys, these are coming up like sharks preparing to breach. They're in a constant upward movement, even as price returns to them. And I know that price is likely to continue or to return to these trigger lines. They're a point of continuation. But I have to give it something solid to bounce off of. Fibs, midband, yellow one-to-ones. And the key is that I want them to be inside of that continuation point, inside of those favorable large triggers. And then once I define it, once I know where the areas are inside of favorable large triggers, well, I've created this window of opportunity. I've created this area where the market is most likely to continue. So if I go through it, the large chart says up. The large chart says odds favorable momentum. The large chart says clear path. The only reason that I look to my smaller chart is because the rules are met on the large chart. And guys, I can't stress this enough. If the rules are not met on the large chart, the likelihood of success goes down dramatically. I'm going to wait for a reversal bar on the smaller, faster chart. At the time of the reversal bar, I will identify my favorable large triggers. I'll put those in a red box. And then I'll identify the areas within. And I'll do that in a shaded box. From the highest point of support to the lowest point of support inside of favorable large triggers represents where the market is most likely to continue. I'm going to activate a limit order at the top of the window because my large chart is screaming to the upside and my large chart has absolutely nothing in the way. And my large chart has no areas to react to. I don't expect the small crowd to push much beyond that point. But they can. And it's okay if they do, because we've defined the area where they may push to. And if they go beyond the midband to this area of support, I don't panic because I'm still inside of the window. I'm learning to define where the market is most likely to continue. And if they push to the fib, I don't blink. I'm okay with it going against me because I'm still where the market is most likely to continue. Even if they go all the way down to these yellow one-to-ones, I don't have a care in the world because I still have odds favorable momentum. I still have a clear path and I'm still inside the area where the market is most likely to continue. Guys, defining this area is the first step in your journey because once you know where the market is likely to continue, you can put a protective stop where the market shouldn't go. You can put a stop 4 or 5 ticks below that window of opportunity. And here's the deal. Every now and then, that small crowd's going to muster up enough giddy up to come down and hit your stop. you've reduced the amount of your loss. You have reduced your losses by putting your stop where the market shouldn't go, because at this point, I no longer want to be in that trade. I don't want to be in a trade that's going beyond where the market is most likely to continue. And as a brand new user, you're going to have to remind yourself that anything that wins 70 to 80% of the time is mathematically obligated to lose 20 to 30% of the time. And I don't know, the market is wrong, right? It's a cost of doing business. What else could we say to make us feel better? It's a normal part of a positive equity curve. There's some big words in there, right? And guys, the thing is that losses happen every day. Losses happen on every market. Losses happen on every time frame. Losses happen with almost every trader in the history of traders. But the key is, are you taking the correct losses? Are you taking the losses that offered a statistical advantage? Did you have momentum, a clear path, and an entry area? And if you did, I promise you, you're going to get to the point with a little bit of study that you just go, okay, next. I had every advantage and it didn't work. It's a cost of doing business. Let me regroup and look for the next trade. And guys, the cool thing is that when you learn how to get this entry, when you learn how to identify this point, when you learn to take this trade, this is the trade that 70-80% of the time, this is the result. Profit target reached. It makes it to the next area. It bounces off those key areas inside of favorable large triggers. And once it pivots up in the direction of your trade, you're going to reduce your risk 2 or 3 ticks below that. You're going to have even less risk, even more profit potential. And some very common problems that new users have, not problems, just, I don't know, growing pains, is on the small chart. If divergence prints on a high probability trend trade, they panic. One loss of momentum cannot override odds favorable momentum on a large chart. Guys, it's a smaller chart, a refinement chart. The next thing, the small triggers may turn against you. Again, momentum is defined on the larger chart. It's important that you understand that even when these small triggers turn against you, your large chart still has odds favorable momentum, and the large chart leads the way. You're also going to get people that see fluctuations on the small chart, and they're going to jump in right at the top of this bar because of that fear of missing out. And that fear of missing out causes you to make decisions that don't really fit the rules. They're going to cause you to take earlier entries, and earlier entries only increase your risk, because if my stop has to go down here initially, I have made that risk huge. But here's the other side of that, is my distance to the target has shortened dramatically. New users will try to get in on the reversal bar, but that's not your entry. New users will try to get in on the bounce or the hitting of the triggers, but that's not your entry. Your entry is at the areas inside of favorable large triggers. As a new user, you might even get in somewhere over here. At least over here, your risk is established, it's reduced. But this early entry is one of the downfalls of new users. They get in early, and I'm trying to just walk through everything that I've seen. They get in here, and they say, man, I can't risk more than $100, and they put their stop right at an area of support inside of favorable large triggers, and they get stopped out, and then the market does everything that they want to do. So, guys, your first 30 days with me is recognizing entries for the high probability trend trade. It's being able to pinpoint where the market is most likely to continue so that you can put a stop where the market, not a cost of doing business, TLC, directly into a termination condition, 100%. Sorry, guys, I saw TLC say, look at my recent one, and I thought that it was going to be a rules-based trade, and TLC did too. But this is the example that we use to take the picture to put in the spreadsheet. Is price reached a divergence high, triggers were below, textbook term, no long trades. And TLC, I'm sorry for your loss, but you created unrealistic expectations. You traded directly into an area, 100% per the rules, that isn't a trade at all. But down here, with all the momentum, with the potential to break, with no divergence, you could have taken the perfect entry all the way up to that problem spot. And guys, this is why you present in class. Because if you think you took the perfect trade, sometimes a little bit of feedback helps you avoid that mistake. And I'll also point out the perfect trade that you missed. So, guys, I want you to embrace the idea that it can be simple. I want you to embrace the idea that it only takes 2 charts to get it done. And the more you post in the room, it's like getting a private session, guys. It's like having a conversation with me, and we're going to look at the advantages. We're going to look at your chart read. You're going to tell me what you saw. You're going to tell me where you did what you did, why you did what you did, why you got out where you got out, and we're just going to work together to do it. And so TLC, do you see it now? You went directly into, and look at this. You'll love this. This is the picture that we took this morning. Nope, that's not it. Hold on. The picture that we took this morning as a classroom. Dang it, 0 for 2. Was exactly what you traded into. 100%. And if you didn't count the printed divergence, and TLC, thank you for saying that. Guys, if you're not catching the areas that can stop the market, then you're not studying the areas that can stop the market. And so we just found a big chink in the armor, right? We found a hole in the ozone here. TLC, you just became a better trader because now you know to look for those divergence highs and lows. And we would have never gotten that lesson had you not presented in the room. Had you not said, look at this one, Mark, I took the perfect trade and it lost. It's just a cost of doing business. When the reality is that maybe it wasn't the cost of doing business at all, that maybe, possibly, it just wasn't the right trade, and that's okay. And guys, we can use these circles when there's odds favorable momentum to begin to study the look, to see if they do in fact come back to support or resistance inside of favorable large triggers. We can go back historically and prove the method sound. We can go back historically and we can look at entries, and we can look at exits, and we can look at momentum, and we can look at all these different things. And we don't trade these tails, guys, but here's your study guide right here. If you go back and you circle a tail with the momentum, with the clear path, and it lines up with support inside of favorable large triggers, well, then you have a high probability trend trade. You should probably open up your picture software, take that picture, share it to Screencast, get to your spreadsheet, and drop it in there and say something clever, like never missed this long. And it's not your desire to win that creates a win. It's not the tail that gives the entry, guys. It's the momentum, the clear path, and the pullback to the areas inside of favorable large triggers. And once you're a chart reader, you're going to find other ways to get in the market. You're going to find ways to capitalize on getting in the market. So, guys, I'm going to ask real quick, are there any questions about the high probability trend trade? And Paul, forgive me for calling you out. I know that you're brand new, right? And you're working on these things and you're trying to absorb all this stuff. So, Paul, the easiest thing for you is to go through that 101 section and go through that same drill that we did today. Start identifying odds favorable momentum and just commit the look to memory and go through, and eventually you're going to piece it together. Eventually you're going to be able to take that momentum and add to it a clear path and then refine it to an entry area. And right off the client's trades, guys, there's entries long, entries short. And this is the first step, ladies and gentlemen. This is the beginning of your journey as a brand new user. This is how you become a chart reader. And it's a chart reader that turns you into a trader, guys. It is not the other way around. So if you have odds favorable momentum, and a clear path, and this is still calculating, and that market pulls back to resistance inside of favorable large triggers, ladies and gentlemen, you have the best of the best. Good morning, Jess. Does everybody see how that's set up? I'm still calculating. I don't even have fibs on this yet. But do you see odds favorable? Do you see everything? Debbie says, Mark, I see it, and I'll be damned if I'm going to miss that great entry and not get paid all the way down. And this happens with confidence. And Debbie, why weren't you in up here at the mid band? Oh, see, now I have to scold Debbie. She's my favorite grandma in here. But she missed her entry, right? But here's the cool thing is Debbie has enough experience to know that just because she missed the entry, it doesn't mean that the opportunities are over. So she waits for the second chance. And she's still able to capitalize, chasing the grandson. And because of the momentum, she knows where the market is likely to go. And Debbie, you're late on the exit, right? You could have been out at 93. You could have been out down here at 91. Areas with weak triggers. But she gave it a shot. She was willing to risk a few to come after it. So guys, this is exactly what we're doing, is we're finding high probability trend trades. We're looking at the idea that momentum pushes the market. We are enjoying the idea that a clear path is a great thing to have. And then when we have those two things put together, we're just going to refine it down to that perfect spot. We're going to capitalize on the advantages that the people in charge have provided us. So guys, this is the first hour. I'm going to leave you guys with the market. This is the S&P. Let's go to crude oil. I'm going to take 5 minutes. I'm a big fan. Go stretch your legs every now and then, guys. Where'd my crude oil go? Oh, that S&P is still calculating. So I may have just crashed my my NinjaTrader by trying to open up charts while other ones were calculating. We'll see if something comes up, guys, but I'm going to take 5 minutes. When I come back, we will start looking at the charts that you guys have posted. See you guys in about 5. Between coffee and all the water, I almost didn't make it. I'm gonna go save the world. Love you. All right, guys, we're going to get back into it now. We're going to get into that second hour. And what we're going to do is we are going to talk about having a plan, guys. The most important thing, in my humble opinion, which means absolutely nothing, to be honest with you, is that you have a plan, that you know exactly what it's going to take to get you into the market, that you understand exactly what it's going to take to get you out of the market. And when you have a plan, and your plan has been tested, and your plan has been proven, and your plan is repeatable, good morning, PC. What you find is that your reliance on opinion and your reliance on hope and your reliance on wishing and wanting and praying and all those things that rarely yield results, they're able to go away. This is the KISS plan, guys. This is a stepping stone in your journey. This is a plan that optimizes your chances of success with the high probability trend trade, and also that medium probability, that 50-50 trade, that area with the potential to break trade. And what happens is that through simulation, through study, through class feedback, continuous practice, you're going to create a plan that suits your needs. You're going to create a plan that allows you to catch more moves. You're going to create a plan that allows you to see more patterns, to recognize more advantages. And then you'll build your own personal plan based on your ability to read those indicators. Zen Trader, I see your picture in there. And for you newer users, I just want to let you know, we do go through rules in the first hour. I do give you guys a plan. And then we start going through on the chart reads. And Jas, when you say how the software works in a fast or volatile market, do we need to make adjustments in charts? I guess the first thing that you would have to do is create a definition. What's fast to you and what's fast to me, right? What is volatile? And I think what you'll find, Jess, is volatility is maybe a result of news, correct? News releases, the market goes absolutely crazy, and it's so fast. To me, that's a volatile market. That's a market that becomes very difficult. Was yesterday very fast and volatile? Which market are we talking about? And this is a great question. Okay, so the ES was a very fast, volatile market yesterday. Um, so, Jess, here's the beauty of it. And I think that you're going to dig this answer, I hope. And it really is true for a lot of people. One of the things that these pictures do for you, Jess, one of these things that the recognition does for you is it almost slows down the market. There was this interview with Tom Brady once, and it was Tom Brady and it was rookie quarterbacks. And they were asking rookie quarterbacks, what's the biggest adjustment coming to the NFL? And these rookie quarterbacks all said the speed. The speed is overwhelming. The speed is crazy. It's so difficult to make decisions in the moment. And then they pan over to Tom Brady, and they're like, Tom, what do you think about the movement of the NFL? Like, is it so fast? And Tom said, you know what? It's like it's in slow motion. He goes, I've been doing this for so long. I know what I'm doing. And it's almost as though everything is in slow motion and I can anticipate and I can see. And Jas, volatility is a reflection of your ability to keep up with the market. And I want to go back to that 8:30 news when the market spiked and bumped and jumped. And this is the NASDAQ. And the NASDAQ moves so fast that we up the sizes of the charts tenfold. But all of this happened at 8:30. And check it out, Jas. This is pretty cool. Straight to support, strong triggers break areas, straight to resistance, back to support, above all of the areas, pulls back to the midband, above all the areas, momentum continuation up, straight to resistance that creates a bounce. Weak triggers create a bigger retracement back to the midband, and it starts to continue up with the trend. All of this, Jas, happened in about 1 minute. Was it tradable? Absolutely not. Do the patterns repeat themselves? 100%. So if you're watching a market that appears to be moving too fast to trade, so for example, if the NASDAQ is just too much for you to keep up with, that's okay. The NASDAQ is crazy fast anyway. So you go to the S&P, right? Or this is crude oil. And the rules are the same. And you go to the that's the NASDAQ. I guess I don't have the S&P up. Let me open up the S&P. But I don't adjust my charts. I don't randomly adjust my charts throughout the day. I don't change time frames. The more time you commit to learning the patterns, the slower the market becomes. Does that make sense? And the easiest way to do it is to always speak to yourself in terms of advantages, to understand what you're looking for so clearly that it's almost like it slows down. Do you guys remember yesterday when we took that short in the S&P? And it was 11 minutes from having the rules met until we actually got filled. And Jas, that was an S&P trade. But if you're not comfortable with what you're looking for, well, then that 11 minutes feels like 11 seconds because you're second guessing. You're wondering, did I have this? Do I have that? Is this the right area? Is this not the right area? So I think what you'll find, Jas, is that the time frames created by Nexgen are appropriate for the movement of the market. And once you learn the patterns, it really does work. And I think that's probably one of the greatest questions ever. The patterns work even when the market is super, super slow. The patterns work on Bitcoin. They work on Ethereum. They work on Tesla. They work on Apple stock. I've watched them work on Hewlett Packard. I've watched people take these patterns in these areas on so many different time frames and markets and be able to be successful. And you'll find what works best for you. And on that note, Jas, I'm working on creating a higher time frame with the exact same look for people that do need to slow down a little bit. But one of the things that happens when you slow down a market is there's less opportunities, or they're further between. And you've got to be comfortable being patient. So great question. Thank you for bringing that up. And TLC, something's going on with your orders. Price is hitting the entry and then the targets. And instead of giving you profits, it shows negative and continues to show negative even after your marks are off the screen. TLC, I'm not sure what's going on, to be honest with you. And it may be a glitch. I don't know if you're live. I don't know if you're sim. I honestly, I don't have an answer. It's live. Same story. Then guys, it's probably a glitch are you guys on Rhythmic or Tradeovate, something like that? So there may be a glitch in Tradeovate right now. And if there is, it'll probably correct itself live on Money Zorro. But I don't know. But if it's happening for both of you, and this is going to sound absolutely crazy, right? If it's happening, I would stop trading until I get it figured out. I would personally go to Simulator, and I would be reaching out to my broker. I would be reaching out to Tradeovate. I would be reaching out to whomever, and finding out what's going on. One thing you can do, though, TLC on Tradeovate, is you can go to your Tradeovate page and see what your P&L looks like there and see if it says something different than what's on your NinjaTrader. But unfortunately, that is outside of my jurisdiction a little bit. Turn it off and on. Yeah, see if that works. Guys, I've taken trades before where when the trade was over, it told me I was down 9 grand after making $200 or $300. And then the reset, everything came back to normal. So, but I would research it, right? This is our money. If your bank account was suddenly $1,000 down, you would research it. So your trading account should be the same way. Let's get into the KISS plan real quick, guys. This is your stepping stone. This is designed to keep you focused. This is designed to optimize your chances of success. This is designed to give you time to learn to be a chart reader so that you can find the other opportunities in the market. And the simple plan begins with don't fight the large chart, guys. The large chart are the people in charge. The large chart are the people that move the market, that make decisions, that react to areas. And the reality is the large chart leads the way. And if you never fight the large chart, you're going to omit an awful lot of problems. We're defining your entry, not my entry, right? So every time I trade, it's my entry, it's my plan, it's my results, it's my decisions, and I'm accountable 100% for everything that I do. Every time you trade, it's your entry, it's your rules adherence, it's your being accountable 100% for everything that you do. So personalize it from the get-go, guys. Define your entry. Your entry initially should be the high probability trend trade entry, the one that wins more than it loses, the one that creates confidence through the memory of success. And guys, I'm telling you right now, what we do is a marathon. Very few people in the history of trading made their $1 million in the first week and then never traded again, right? It's just, that's not going to happen. That's not realistic. You've got to learn how to recognize these advantages. You've got to commit them to memory. You've got to study. You've got to practice. You've got to get feedback. And then once you can define your entry, guys, once you can get into the market where the market is most likely to continue, right? There's that entry, that beautiful entry. You have taken 30 days to define this box to the point to where you can enter consistently with a level of trust and you're feeling wonderful. And now you've got to do something with that great entry. Now you've got to manage it. Why do I say take 20, 30 days to learn how to get in? Because great entries create manageable trades, guys. Because by the time you're proficient at entries, you understand the advantages of momentum. You understand the advantages of a clear path. You can recognize when the path isn't clear. You understand when three divergences on the small chart may create a need for additional management. And then you're going to create a management plan based on your ability to read the indicators. But while you're becoming a chart reader, nobody wants to take the entry and then just shut down, right? We want to do something with it. We want to make money. We want to feel good. So if you keep your management as basic and mechanical as your entries, your beginner management plan is based off of the assumption that you understand where the market is most likely to continue. And this is such a key concept for you guys. If you can't define clearly where the market is most likely to continue, then you probably don't have an understanding where the market shouldn't go. And if you don't understand where the market shouldn't go, well, then you're not going to effectively place stops. You're going to be in a position where you say, you know what, I'm in at 92 and 94 is $100, and I want to put my stop there because I'm not willing to lose more than $100. And the second you do that, the small crowd is going to stop you out and drop like a ton of bricks. And you're going to be feeling sad and dejected. Man, I can't believe I lost that trade. I had every advantage, and the market sucks, and Mark sucks, and I hate Nexgen, and I'm going to go kick a puppy, right? But if you put your stop in the right spot, if you put the stop where the market shouldn't go, with all the advantages based on that great entry, it's more than likely going to give you a reversal bar in the direction of the trade. Sometimes it won't. Sometimes it'll hit that stop. You'll get stopped out. That's a cost of doing business. That's a normal part of a positive equity curve. But more often than not, based on patterns, based on repetition, you're going to get a reversal bar. And if you do, you're going to reduce your risk. 2 ticks above that reversal bar. If it's a long trade, 2 ticks below that reversal bar. And once again, you're just going to sit on your hands and you're going to say to yourself, you know what? I'm not in control. The only thing that I am in control of is whether or not my rules are met, and they are. So they're either going to get me for a small loss, or these mofos are going to have to push it to my first target. And your first target's only $100 in the distance, guys. And that $100 in the distance with momentum, with a clear path, with the perfect entry is really difficult not to hit. And it's $100 in your account. It's $100 that you hear audibly. Ninja Trader tells you that you're a winner. It's $100 that starts building the confidence and the trust in the methodology. It's $100 that nobody can take from you. That is your real $100 Monopoly money. And then you're going to move your risk to break even, which I'm going to tell you right now, you will craft a plan tailored to your personal goals based on your experience reading the indicators. But until you can do that, let's chum the waters at break even. Let's have zero risk on a trade. Let's have money in the bank, because this makes it easier for the new user to feel calm as you wait to see if the market hits the second target. If it does, the second target is only $200 in the distance. That's a $300 trade, guys. $300 trade with the advantage of momentum, with the advantage of a clear path, with the advantage of entering where the market is most likely to continue, and exiting based on rules rather than emotion. And guys, $300 a day translates to a $1,500 week. And that $1,500 week translates to a $6,000 month. And just the basic 52-week math kind of thing, guys, that's a $72,000 year based on the most pragmatic, methodical, mechanical, emotionless approach to trading the market ever that turns you into a chart reader. This is my hope for each and every one of you, that you'll go through, that you will study each of these individual pieces, that you will learn to enter the market, that you'll let your management stay a little bit rigid in the beginning. And what happens is, once you understand these concepts, once you can read your charts, suddenly you say to yourself, I'm in this trade, but I have odds favorable momentum. And I'm in this trade, but I have a clear path. What an awesome opportunity to turn that $300 trade into a $500 trade, into a $700 trade, right? What a great opportunity to let that runner run, to get me to that next key area, because my indicators told me that it's more likely, because the patterns told me that it's more likely. And guys, that's kind of how plans are built. I give you guys this KISS plan every day. I believe in it wholeheartedly. I think that the KISS plan is probably the greatest thing since sliced bread, because it turns you into a chart reader, because it keeps it mechanical, because it helps reduce your wishing and wanting and hoping. My father-in-law used to say, wish in one hand, poop in the other. Mark, tell me which one fills up first. So everything on this KISS plan is dependent on your ability to find the entry. So I'm giving you a checklist as well. I'm dropping these in the room right now. Please steal them. This checklist should be printed out, put it on your desktop, and every time you take a trade, you should be able to mark yes 4 times. If you can mark yes 4 times, ladies and gentlemen, you have a high probability trend trade. You have a trade that wins more than it loses. I've never had anybody truthfully mark yes to each of these conditions and not do better than 70%. Remember that the goal is to get paid. I'm giving you the exact same checklist, but I'm giving it to you with pictures. Your checklist says, is the market coming from a good top or bottom? Is it coming from a termination condition that reversed the market? Guys, there is a link to a video, which is my brother flapping his gums for 45
If I found a way as a
7
chef
minutes
to make a side income with trading,
or whatever it is, talking about tops and bottoms, giving you these ideas of when they're likely to break and likely to hold. And there's a picture of what a termination that reverses the market looked like, the same one from class. And then it defines strong triggers, and it defines the opposite of strong triggers, weak triggers. And it tells you the advantage, and it tells you what it means when that advantage is gone. It talks about terminations, potential to break, and clear paths so you can find them and see them readily. It talks about the window of opportunity for entering the market. And guys, if you go through this very basic approach and you keep it focused and you keep it really just, man, if then, if this happens, then I do that. If I do this, then I'm going to do that. If the market shows me this, well, then there's a trade. And you keep it focused to the point to where you don't worry about anything other than the execution, because the execution yields the results. What you're going to find is that you're a chart reader, that you're in a position to win more than you lose, that you're going to have a wonderful career as a day trader because you're a chart reader. Once you can find this high probability entry, once you can recognize these advantages, your second trade is on the KISS plan. And it's that 50-50 trade. It's that one area not broken trade. That smalls have smashed through the area, but the large haven't made it yet. And guys, this 50-50 trade is not a high probability trend trade, but this KISS plan is designed to optimize your chances of success with this trade, to give you the best of the best entry. So the first one on your checklist, guys, is it coming from a good top or bottom? Is it coming from a reversal that happened at a no triggers through termination condition? Because if it is, it's more likely to win. And if it isn't, it's less likely to win. So this one's going to optimize your chances of success. Do you have odds favorable momentum on the large chart? Because once again, guys, if we go through it, in this trade, you don't have a clear path. So we're going to insist on momentum. Do I have odds favorable momentum on the large chart? Do I have odds favorable momentum on the small chart? Guys, if you can't mark yes to these three, don't go on. And then it reminds you that divergence is a loss of momentum. So you should have no divergence on the small chart. If you do, it's a no and your rules aren't met, you shouldn't take a trade. This is the #1 killer on new users. People that take this trade and ignore divergence lose this trade more often than they win. Let's try to avoid that right off the get-go. If you can mark yes on this one, you're going to use those same entering at the area, getting in at the areas inside of favorable large triggers. And it reminds you, if there's divergence, don't take the trade. Why did I do that? Because all of you are going to ignore this one. And if you're looking at your plan, I'm hoping that you see that one. And then management's different, guys. It's not a high probability trend trade. It has to be different. I don't have a clear path. I'm looking for losses of momentum. I'm making sure that I'm not giving away advantages. My initial stop is still where the market shouldn't go. My first stop movement is still above or below a reversal bar if it happens. And then it tells me one more time, really, truly, Mark, if divergence prints, exit the trade. You've lost your advantage. And then my first target will be $100 or at the first trouble spot. Guys, sometimes that first trouble spot might be $60 or $70 away. You have to make that decision to exit to get paid, to get to break even, and then be willing to get paid quick on the second. It's a medium probability trade, and it's not necessarily a home run trade. And guys, this plan, this KISS plan, is designed for new users to optimize their chances of success. This KISS plan is designed to get you to recognize the best of the best, to keep you focused. And guys, this KISS plan is also designed for you guys that are coming back to me. You went off and you tried to do it on your own and you found yourself chasing everything instead of the best. Guys, this KISS plan has set more traders right, gotten you back focused on advantages than I can name. This KISS plan is the same plan that gets people funded on these prop firms within their first 30 days with Nexgen. But the idea is you have to understand the concepts. And if you're trading in half-truths, if you can't go through and say without question that you have strong triggers, if maybe your strong triggers are a little weak, or maybe your strong triggers are actually weak, well, then you're not setting yourself up for success. And if you're trading in determination conditions rather than making sure that the path is clear, making sure that the small and the large clear the area, well, then you're trading a half-truth, and you can't expect the results of 70 to 80% winners. So fill this thing out, guys. Get it to 25. Share it with me. Send it to me. Go, hey, Mark, here's my spreadsheet. Will you look over it? I want to make sure I didn't screw some stuff up, and I'll run through and grab some random ones and we'll make sure. But if you go through this process of learning the parts before you try to be a trader, if you learn how to be a chart reader before you try to do all these things, guys, you're setting yourself up for success and you're going to put yourself in a great position. And chart reading happens instantaneously when you're good at it. And it's easy to say I have odds favorable momentum, and I can say that I'm almost above these one-to-ones, not quite. And if I get a pullback, I've only got one stinking line inside of triggers. And this becomes potentially a high probability trade. Before, it was a 50-50 trade. The smalls were through, the large were not. It was from a bad bottom. And this one works. And then divergence printed and it pushed it lower. And man, we're just trying to make it happen. And now it's a clear path. And now it's still momentum. And guys, I have one area inside of favorable large triggers. And I am hoping and praying that the small crowd does their thing. Does everybody see that? Does everybody see strong triggers? Does everybody see that smalls and large are above the one-to-ones? The path is clear. Does everybody see that I have one line? If I find my triggers, that's the correction point, but I have one solid area inside of them where this market is likely to bounce. My job is to activate a limit order just above that area. And if the market continues up, what's going to happen is I'm going to have to go above because this mid-band's coming up as well. The small crowd is trying. Give me a why, ladies and gentlemen, if you see why I activated a limit order. Does this one fit the plan? Does this one fit the KISS plan? Anybody? Jen says yes. Haji says yes. Am I guaranteed a win if I take this trade? Am I guaranteed results? No, of course not. But it provides a statistical advantage. It gives me everything I need to feel good about activating a limit order right here. Because 92, Jess, is all the way down here on the wrong side of my correction point. 93 and a quarter, 93.50 is above the area of support inside of favorable large triggers. Entries happen on the small chart and they happen at lines inside of triggers. Does that make sense? 92 is on the wrong side of everything. And we'll see what happens, guys. It may come back, it may not, I don't know. Here, price reached resistance and not one of the trigger lines broke, which means that I don't have rule number 2 met, which means I don't have a trade. Here, I have odds favorable momentum. This is crude oil. And I just obtained a clear path. And if the small crowd fights, guys, I've got lines inside of favorable large triggers. My job is to activate a limit order. I've got a fib. And I've got a mid-band inside of favorable large triggers. And these areas represent where the market is most likely to continue. And look at this. Now they're on the wrong side. That's not my trade anymore. That's all you're going to do, guys. Oh, they missed me. Or did they? Should I just jump in? Or should I wait for my rules to be met? What do you guys think? I see a lot of you jumping in right there, hoping. Jazz says maybe. Ron says don't chase. Paul says wait. Whoa, look at that. Oh, man. I'm so glad that I didn't jump in. Do you see how the mid-band continues to rise and then that is 2 ticks above it now? And now we're in the trade at the area where the market is most likely to continue. And $100 is right there. And $200 is right there. And this is where the market shouldn't go, Jas, right around 92. And I already hit my first target, which means I'm now break even on the trade with odds favorable momentum, with a clear path, having entered at the area inside of favorable large triggers. And there's not a damn thing for me to do except hope that it hits my second target or hope that it doesn't hit this. Andy, I make it look easy because I have studied this for 3 years. Because I've got about 10,000 pictures of high probability trend trades. Because I knew in an instant where the market was most likely to continue. And I knew that if I jumped in on this fluctuation, I wasn't following my rules. And I'm not going to lie, guys. Even if it's $100, I feel pretty stinking good about my ability to make $100 instantly. And Andy, you get nervous at that fluctuation. How come? Because you don't have enough repetitions yet, because you don't have the experience, you don't have the seat time to know that that's the best spot. And there we go, guys. Oh, it hit us and didn't fill. Man, that's some nonsense. Of course I will, Paul. Target filled. Congratulations, ladies and gentlemen. So, Paul, this is where we take a picture, brother. And we do this. We say, and this is the most important thing, okay? Rule 1, smalls outside of large. Strong momentum. That's rule number 1 in a nutshell. And then on that most current bar, I have to use the language. Price did not reach an area. My path is clear. No term. Rule 2 met. And then we can compound on that one. And we can say smalls and large cleared 1-to-1s. My path is clear. Does that make sense so far, Paul? So we start with rule 1. Rule 1 says I have to have smalls outside of the large. Once I have that, I start looking for that entry. Or I start looking for that termination. And then you notice that I didn't trade this tail, that I defined the one line inside of favorable large triggers. And my entry, let's do this. Entry was at the area inside of favorable large triggers. So what I did, Paul, 100% is I followed the rules of the KISS plan. 100%. A tick or two above that highest point of support. And the cool thing is there was only one area of support. And TLC, what does that mean? You put your entry the same as mine and did get the fluctuation, you were too late? I had my entry in when the market was right here. Didn't get the fluctuation, you were too late. So why were you too late? Let's look at that. Entry was at 1044. Reversal bar was at 1040. We had 4 minutes to figure it out, right? And that's okay. If you move too late, then it means that you need to study this look, trust this look, learn this look, and commit this look to memory so you never hesitate, so you don't get caught on these fluctuations. Do you guys remember this morning when I said one of the most common things I see with new users is jumping in on the fluctuation only to have it go right where it was supposed to go? What are you showing me? That's okay. I just opened up and I did a complete rebuild, TLC, but let me ask you, did this have anything to do with missing this? Did these yellow 1-to-1s have anything to do with missing this trade? No. TLC, I did a complete enema on everything yesterday. I built new workspaces. I cleaned out all my data. But look, there's my 1-to-1s. Maybe it is the same as yours. I'm missing a fib, though. You have a fib that I don't have. Yep. Is that a fib or is that a red line that you drew in? That is a fib. It could be me. It might be you. I don't have the fib. But look, there's that 1-to-1. That would have been a great spot to take some profits too, guys. Trade your charts, TLC. Do your clean out every day. Rebuild your charts every now and then. You'll be good. So, Paul, did that help you a little bit? Where did that picture go that we took? So this is the key, guys, is take your trades, right? Tell me what you saw. Tell me about your rules met. Tell me why it was okay to take the trade. And I promise you guys, if you use the language, entry was at the area inside of favorable large triggers. That's what defined my entry. Use the words area inside of favorable large triggers. Use the words smalls outside of the large. Use the words price did not reach an area. And what you're doing is you're committing it to it. And Paul, the cool thing is, man, is your day 2. And by day 3, it gets easier. By day 5, you're brilliant. By day 25, you're making money if you keep it simple more often than not. But this one right here, guys, this goes into my trading plan. This is my perfect long. And there's a lot of you in the room that didn't take it. And you have to ask yourself why you didn't take it. What scared you out of it? What kept you from taking the trade? It might look bad too, TLC. I don't know. Uh-oh. So guys, let's start looking at what you guys did. And let's go look. What is crude oil saying? So TLC, you're saying that weak triggers at areas with divergences looks good to you. Can you tell me what about this looks good? I see what you did there, Paul. Question mark. Why? Why don't you wait for it to break? Do you see what I just did there? Why don't you wait for your rules to be met? Because weak? But those were strong and it didn't go down. Those were strong and it still reversed. Those were weak and it reversed. Those were weak, it still ended up continuing down, and those weak triggers smashed through areas. So why not just wait for the rules to be met? And that's one of the things, TLC, that I really encourage you guys to do. Don't try to predict what the market's going to do. Do what the market is telling you that it's doing. And right now, the only thing that it's telling you, TLC, is that you don't have a trade. And the cool thing is play both sides of the coin. Don't get married into a look. If the area breaks, I'll look for opportunities short. If the market rolls and my rules are met, I'll look for longs. Oh, man. And I say that because TLC, let me see if I can find an example. I would say this is a termination condition. And I would go long right here, right? And then I'd go long again here, and I'd go long again here because I said, it was a termination condition. And I'd lose 4 or 5 trades, and I'd lose a lot of money, and I'd be upset. And then I'd come back and look at it, and I'd say, son of a bitch, my rules were never met. I got so married to the long trade because of the termination condition that I made bad choices, that I broke my rules. And I was notorious for that, TLC. And that took me a long time to outgrow. So when I come back at you guys and say, don't worry about what it does. Worry about what it's doing. Don't worry about what you think it's going to do. Worry about your rules being met. And what you'll find is you can create expectations that set you up for having your rules met. And we had a pretty good picture of that this morning. And I'm going to show you because I took it in 2 different parts. Let me get up to it. Bum, bum, bum. That was 12. That was yesterday. Coming through. I'm still looking for this morning. Hold on. Here we go. So I had this one this morning. And the picture on the right, I know TLC, but my job is to respond to the information that I'm given. Does that make sense? So if you type slow, finish your thought before you drop it in the room, because I have to respond to what you tell me. The same way I have to respond to what you tell me on your charts. So guys, this was my chart read on the NASDAQ. And my chart read on the NASDAQ was that this was a bad bottom, which means that it wasn't a termination that came from a reversal, which means that my mid-band is my expectation. That's my expectation based off of a bad bottom. And then my large triggers are still down, and my only momentum is that immediate move. It's that small triggers. My large triggers are not there. I don't have odds favorable momentum, and I hit a fib, and none of the triggers are through. And guys, that was right here at 34. But everything's still set up, and the market pushed up, and then I used another chart based on my expectations from the read to be able to capitalize on a $400 move on a 4 lot in between the two areas. But the large chart gave me that one. And what happens is you have to wait for the rules to be met. Otherwise, you go short here, and you go short here, and you go short here, right? And then when all those shorts don't work, you break your rules on the long, and then you lose money that direction. And it's easy to get married to an opinion. It's easy to get married to what you hope happens based on your chart read, but you have to wait for your rules to be met. You have to wait for those advantages to be present, and that is where everything comes together and life gets pretty good. So wanted to share that one this morning. That was a fun one. But that's not a high probability trend trade. It even fights direction and everything. But because I've been reading charts for 3.5 years, my plan's a little different than yours. Andy, 50-50, divergence, took a loser, brother. Didn't follow the KISS plan, right? KISS plan would have kept you out of that. KISS plan would have kept you out of that. And then Haji, 50-50, divergence. KISS plan would have kept you out of that trade. And then with the large triggers down and the smalls below, directly into one-to-ones, no momentum. How the hell are you going to take a momentum trade if you don't have momentum? That's like the double whammy. So guys, it's okay to lose these. It's okay to take these losers. It's okay to do these. But the honesty is when you take these trades, you've got to go through, you've got to study, you've got to look at it, and you've got to say something. You did have momentum on the first one? Okay. Okie dokie. Here we go. And you don't have to answer this. Haji, are you making money every day? Are you winning more than you lose every day? Are you finding success every day? So you're break even. Guess what? That's not winning. From a good top or bottom? No. Odds favorable? Yes. Odds favorable? Yes. Divergence? No. You gave away 50% of your advantages, 50% of the advantages that have proven to optimize your chances of success, and you decided to go short on 12 contracts, which means that you just lost $1,200 breaking your rules. I believe that was avoidable. And then I don't even know what kind of trade this is because there's no momentum on the large chart. It's not from a good bottom. You're directly into one-to-ones. The small triggers didn't break it. This is man, I just broke my rules. Maybe I can get lucky. Exactly. It's a revenge trade. So 2 avoidable losses. And then Haji, if you didn't break rules on the first one, you wouldn't have been so inclined to take the second one. And guys, I say it all the time. Sometimes it's not the money you make, but the money that you don't give away. The money that you don't just piss into the wind because you're hoping that something works. And Haji, you are a freaking rock star on your chart reads. There's no doubt in my mind about that. And you understand your rules. and you just got a little excited, right? And when you got a little excited, you did this. And guys, that's when you walk a lap. That's when you're like, oh man, here we go. I need to take a second. I need to walk around. I need to clear my head. I need to get to a point to where I'm more focused on my rules than winning. And then good bottom, 50-50. Two divergences. So your entry, Andy, your best entry was here. But by the time you get up here, it's almost all the way broken. You take the entry right above the midband and you're able to capitalize. And Andy, it's a little outside of your rules, right? And now the smalls are on the wrong side, and this one works out. And it's fun to say, it's fun to say, but Mark, I won. But Mark, look at my results. Is it, hold on. The smalls are through the area, but the large are not. This is a 50-50, right? So that's the challenges. Let's go through the advantages. That's a termination that created the reversal, right? That is momentum. And this area has the potential to break, and it's more likely to break because of that great bottom down there. One divergence, I'm willing to take a shot. I don't mind that shot at all. That shot doesn't faze me because of the great bottom. Two divergences on a 50-50 trade, especially with the smalls on the wrong side of the large, is more likely to fail and push lower than it ever is to go up. And that's just patterns. So Andy, you went with momentum, you went with direction, you went from a great bottom, and you took what I'm going to say is a calculated risk on a trade that doesn't win more than it loses because of the momentum, because of the strong top, because everything is green, and you got paid for it. And it wasn't a huge amount of risk. Are we up here? Am I pointing to the wrong one? I'm just doing that because I saw the fib here. This is 268. This fib right here, guys, is this fib right here. So what we have is a little voodoo trickery here. Oops, hold on. That's your trade, Andy. Your trade wasn't at the top of that move. $23.68. This is the area where you entered. This is that same fib. It's 50-50. This was $23.63. That was your exit. With weak triggers, I love your exit. Right? So it was 50-50. Does that make sense, Jen? Do you see it as well? Not only was it 50-50, it was 50-50 with two divergences. And you couldn't have been taking this into factor because this hadn't happened, right? So one of the things, guys, where we're being able to circle these tails and go back and look, Andy, if you circle your entry, it'll show you exactly where you entered over here. And that makes it easier to line things up, to take away that little bit of guesswork. I like all the advantages, and I think you made a strategic choice. And let me say over here, and I didn't know you were even using HVAs, but having an HVA helps you even more with this trade. That's okay. I'm going to go through and I'm going to give you my chart reads as well. And guys, I'm going to show you right now the tiebreaker on the second divergence, Andy, and I didn't even see this because I've never seen you use this. That HVA line says, Andy, give it a shot. Because this was a line in the sand created by the buyers. But that was your best entry. That was your second chance, lower probability. And your exit is absolutely beautiful. Breaks the KISS plan. So I have to say, if you are trying to adhere to the KISS plan, you broke your rules. Obligated to say that. Because one of the things I do is I keep you guys accountable to the rules that you tell me you're trading. Much to your chagrin. And then TLC, we already talked about this one. This was directly into a termination condition. An area likely to stop the market, and it didn't work out. And then Josh, weak triggers, but a clear path. And then it reverses and gives odds favorable momentum. And it's almost a clear path, but with no divergence in these split triggers. Guys, this is a great chart read by Josh. I want to share this. Favorable large triggers means that the synthetics and the large are one on top of the other. Did that make sense? Favorable large triggers means that the large and the synthetics are one on top of the other. Guys, these represent where I expect the market to correct. That's the wrong color to use. We'll use white. I expect it to return to these triggers. It's okay, Andy. Truth comes through repetition. And you haven't been with me so long that I think that you should have any regret or remorse about not being 100% proficient in the moment. Guys, it takes a while to build the trust. But this is where, and Andy, this is another one, you need to go back and re-annotate that chart. And you need to say that it was a 50-50 and that it did have two divergences and that maybe you got a little lucky. And if you go through typing that, what you're going to find is that it's easier for you to repeat the ones that are great and begin to miss the ones that are not. So I'm going to use this. And Josh, you get the gold star today for posting this one. I expect price to correct to the triggers on the small chart. That's it. That's my only thing. That's my first expectation on the small chart, is that I expect price to correct to the triggers. My only area is hovering in between the triggers, guys. So is it going to come here or is it going to come here? Hell, I don't know. Josh didn't know either. So Josh said, you know what? If I can't be sure which one, I'll take an entry at the one that's furthest away. I'll take an entry at the one that gives me the least amount of risk. And he also, and then Andy, this is kind of what you did. He had an HVA line right there. So Josh, no, you did get in early, didn't you? You were in at 11:25, hovering in the middle of everything. And it does correct to the higher. You got in two below, but it's not inside of triggers, right? So maybe this lesson is for you. Maybe this is an inadvertent lesson. Where was your HVA line? What a great tiebreaker if you're going to use this chart. I'm not going to jump in early. I've got split triggers. Shit, I'm going to get in at the HVA line. And then you've got like 2 ticks of risk, and you've got an extra 1.5 of profit. Because this isn't inside. This is hovering in between the two. So Josh, this lesson is for you. When you have split triggers, brother, you don't know where they're going to go. This HVA line helps you make a good decision. And ladies and gentlemen, if you don't have the benefit of a range chart, then maybe waiting for it to hit that highest point and start heading back down gives you a little bit of confirmation. So Josh, it's a great trade. And man, I don't know you well enough to say this, but I'm going to say it anyway because it's kind of like fun. Dude, you totally tripped over your skirt. What's with the exits? What happened there? Your dad yelled at you too? Oh, okay. Work call is okay. I'll tell you what, you keep trading like this, they won't be calling you for long, except just to see how you're doing in retirement. I love it. Jerry, good job. Get him. Don't let him get away with that. You taught him better. Odds favorable, clear path. Guys, this is when we hold for the moves. This is when we let that momentum scream, and you got it on all three charts, brother. I'll give you the work call, though. All right, who's next? Let's go through. And guys, remember, just because it's not your chart, it's okay to ask a question. The charts are for everybody. The feedback is for everybody. The lessons are for everybody. 50-50 with divergence, you got run over. So Andy, 50-50 with divergence, split triggers. It's a good bottom, but that doesn't magically omit the idea that 50-50s with divergence are going to kill you more than they don't. Triggers roll, odds favorable, 50-50. You wait for the higher area inside a favorable large trigger. So Jen, you took that lesson that we just talked about, right? When they're split and they're hovering, why not wait for the higher? And then the second higher divergence says it could be problematic. And then that's the easy one. That's the one that Josh took. And then beautiful profits riding it all the way down. And then Jen, if you want to, I was with you. If you want to poke a little fun at Josh and go, man, I'd tell people I had a work call too if I got out up here. Just kidding. I'm kidding. But beautiful, out at trouble. And guys, these are the effortless ones. Josh and Jen know it now. They've spent time with me. They've done their chart reads. They believe in momentum. They believe in areas inside of favorable large triggers. And what happens is they begin to capitalize on these moves. And they're like, oh, I can do this every day. This happens on every market. This is a move that happens all the time. And Haji, what a great recovery, man. Haji makes a couple mistakes and he says, you know what? I can correct that. And you waited for it to pull back to the synthetics, it looks like. It's hard to tell. And down it goes, and you and Josh are in cahoots on your exits. But yeah, sometimes it moves so fast when it's the right trade that it's hard to move that second stop. And Josh, the thing is, man, is don't let that 8 range lead the way. Don't let that 8 range lead the way. Make sure that your large chart tells you that it's time to go. Make sure that your small chart defines the area. And then this was, Haji, was this you again? Hold on, let me see where we're at. Not Jen. I'm trying to figure out who this was. Weak top, odds favorable. I did that one. Hold on, I'm going to find it. Sorry, guys, I got lost. It happens sometimes. Haven't seen that one yet. Muser, this wasn't you. This is Jay Weathers. JW. All right. So JW, let's see what we have. Man, that took me a long time just to figure that one out. I was up top looking for it. Sorry. Odds favorable, everything down, 50-50, one divergence. And then JW, this is just that great lesson on split triggers. But you've been doing it long enough to say, you know what? I know where the market shouldn't go. I'm going to make sure I don't miss it. And you knew where the market, and just outstanding, JW. Guys, this is what happens when you have trust. And I'm not going to lie. That is a metric crap load of risk, JW. That's a ton of risk. Especially from a bad top on a 50-50. Especially with divergence on a bad top on a 50-50. Especially with divergence and split triggers on a bad top on a 50-50. I would have gotten a little nervous too. And I don't disagree with your first entry. And I'm not going to lie to you, this is one of those trades where I'll take a 4 or 5 tick hickey and I'm cool with it. And then I'll wait for the higher level. Or I'll just wait for the higher level and say, you know what, if it doesn't get me, it's just not mine. There's too much going wrong with this trade to feel good about putting $500 of risk on it. That's my personal plan. But you understood where the market was likely to continue and where it was likely to not go or where it shouldn't go, and you put your stops in appropriately. And that's really all you can do. And then GWC showing you guys that even if you miss the best entry on a 50-50 no divergence pullback, sometimes the market gives you a little snap to get you in right at where your entry price was going to be anyway. And GWC, that is awesome capitalization. Not taking this entry because you weren't sure, and then when it starts to go and gives you that little blip, beautiful job catching that. The rules are the same. The large chart is the same. You just took that little fluctuation to get you into the area after confirmation, and I do think that's pretty brilliant. And then Josh, odds favorable, clear path, perfect entry, money, money. Who called you this time, Josh? Was that your dad calling you? Said, don't you dare jump out of this one early again? That's all right. You're trading into outer bands. You've already had a divergence and you're making money. 8 and 16, perfect. Perfect. 95, 75, 95 even. Or is that 98? That's 99. 8.99. Great job. Divergence don't start to print, Josh, at all, especially not on this bar. Yeah, it's just potential until it's true, though. That's the biggest thing. It's just potential. If you walk up to me and keep poking me in the chest, there's the potential that I'm going to knock you out. But until I actually knock you out, it's just potential. Poke the bear. Great trade, Josh. And then Andy, let's see what we have, brother. Oh, we saw that one. And then we saw Haji's. We saw JW's. Jen, I think I missed yours. I apologize. Weak triggers, gap fill, not trading gap fills, only momentum. I love it. But great recognition on the gap fill. And it worked, didn't it? And Jen, eventually you'll catch that short. Bad top, 50-50, 2 divergences. All right. So no areas inside of triggers, split triggers, 50-50, bad top, multiple divergences. Andy, so what the market's doing for you today is it's saying, Andy, I want you to become very comfortable breaking every one of your rules. I want you to become very comfortable making mistakes, and I want you to become very comfortable in the idea that low probability trades will pay you. And then tomorrow, let's see how it works out. Odds favorable, clear path, split triggers. The only areas floating in between the two, right? I love to let it hit the synthetics, guys. And then eventually you end up with a 1-to-1 inside of those triggers, and that's where it continues from. And then when it pulls back here, there's absolutely no reason not to hold or not even to add on at that mid band when things tighten up and it looks like this, and then that thing runs down. Beautiful trade, Muser. Beautiful trade. And guys, sometimes I tell you you're getting lucky, and sometimes I say, man, you're setting yourself up for success. And sometimes I say, you are literally stepping in front of a freight train and you're probably going to get your ass kicked more than you don't if you continue this path. And it's up to you whether or not you want to believe me. And then smalls are up, large rolled, 3 divergences, 3 divergences. And Jen, you just say I'm not going to get caught in between it. Termination condition, no momentum down. It's not the best momentum up. It's still a termination. And you're just like, ugh. How about if I just sit on my hands and don't do anything for a little bit and not give money away? And I love that. And then Paul, weak bottom, Odds favorable, 50-50, no divergence, perfect entry, easy money. That's the same one we saw somebody take, right? I don't remember who. No, Andy, you keep the dunce cap off. Put the valedictorian hat on. Because you're learning every day. You're getting better at these every day. You're getting smarter every day. If you don't break your rules, guys, you're probably never going to understand what your rules are. If you don't break your rules, you're not going to understand how to avoid breaking your rules. If you don't break your rules, you're not going to get all these different things that you need. And it's okay. So Haji, bad top, odds favorable, clear path. You took a calculated shot, Haji. The only thing that I would want to know is why did you leave so much risk on a trade? You knew exactly where, if it was going to work, it was going to continue. And you gave it an extra point, an extra 10 ticks more than it needed, which on a 10 lot, I believe, is $1,000 extra risk, where the market shouldn't go, Haji. Have you ever heard me say that in here? Haji, these are your triggers. Whoops, we'll save that one. Right? Where's your area inside? Haji, where does this market need to go from for it to be right where it's going? That's it, right? And even if you give it that little extra correction space, doesn't it make sense? Man, if I go up above these triggers, something's gone wrong. And then Haji, because it was a bad top, your first expectation for a bounce has to be the midband. I love your entry. I love the look on the triggers. It's not acting as a termination condition. I just think you could have gotten out of this one with a lot less risk and kept the powder just a little more dry. Does that make sense? Well, no. There's a big difference between hanging in there and just being ridiculous. And I want you to see where your stop was on this chart. 49. You are saying that if this trend trade right here doesn't work, I'm okay with the triggers rolling. I'm okay with the triggers rolling. I'm even okay getting above freaking 1-to-1s with all the triggers below it and everything. So there's got to be a point where you're just like, man, let me take a little hickey. Haji, you're so stinking good at nailing your entries that you deserve less risk. You deserve less risk. Does that make sense? Love yourself a little bit, brother. You're good at this. That's okay. You'll get there. But you've got to do this a few times to get there, right? You've got to do this a couple times. Man, my risk could have been a lot less. Let me do less. Because isn't that cool? Because then it means if you only lose 1,000 instead of 2,000 here, what it means is that you've got an extra 1,000 in the account to break your rules somewhere else. That's not what it means. It means that that's $1,000 that you're not giving away. And then, Jen, is this odds favorable momentum large above the small? Is that was the question, right? Okay, just want to make sure. I want to make sure that. So, Jen, gosh, call me crazy. And you wouldn't be the first to do it. There's only one look for odds favorable momentum. And that is when the background is green, the smaller green, the larger green, and the small are above the large triggers. This is the only way. Right? And then what you're looking at in this picture is a little changing of the guards, but still not odds favorable. Yeah, this is odds favorable momentum. This is smalls below the large. This is the colors not matching. And this is not a high probability scenario. Great question. And Jassy loved the trade. He wanted to give it more room. Yeah, we've all done it. If you say you haven't done it, you're probably fibbing a little bit. And then let's see where we're at. You guys are doing great keeping me busy. Thank you, thank you, thank you, thank you. And then JW, I think we saw yours. I think I did a little switch there. No? Odds favorable, clear path. You were waiting for it and it just missed you. Dag nabbit. You went for the mid band maybe instead of the 1-to-1s? How did it miss you? JW, did you put it in there after? Did you miss the first one? And then put it in there after the entry? Because that looks like it hit where your order was. And then Paul, are you asking about the small chart? Yeah, no worries, JW. Why it has the multiple large charts or large triggers? Let me answer Gino's real quick and then I'll get yours. Okay, I got you. No worries. Gino, the only termination condition that I go for on a small chart, the only time a small chart tells me rule number 2 isn't met is 3 divergences in the same price range. Oh, and it's 2 points away from a fib? No, that's huge, dude. That is a bad bottom. Absolutely. So Gino, you're spot on. Sorry, I misread the question at first. You were spot on 100%. That's exactly what that means. That's a bad bottom. 3 divergences in the same price range, TLC. That's in the same price range. That's in the same price range. Once the small and the large got above this one, it's out of the equation. Once the small and the large got above this one, it's out of the equation. Right now, TLC, I have 1 divergence. The same rules for breaking areas we're going to use for divergences. We will reset the count every time the small and large get above the area. So when the small and large got above this divergence high, do you notice how it stopped printing? It's out of the equation. Once the small and large got above this one, it stopped printing. If the small and large get above this one, it'll stop printing. Pretty cool, right? The same rules that you learned for termination conditions apply to recognizing when the divergences are no longer in play. And then, Paul, let me get you squared away on your answer. So on the small chart, we've got 2 sets of triggers. Actually, well, there's 3 trigger lines. There are the small triggers, and when I speak of triggers, both of these lines create the small triggers. Both of these dashed lines create the large triggers. And these 2 right here, the smooth large and the smalls, these belong to the 5-1. These are based on the chart, based on the bars, based on the price action, based on everything. The calculations are done per the 5-1 for these 2. And then let me do a different color for this one. These stepped triggers right here, these are the large chart. We'll make it possessive, large triggers. So what happens is when we put both the native large triggers and the large chart large triggers off here, it has been determined that there is a very distinct statistical advantage when these 2 trend one on top of the other. And what it does is it sets us up for the highest probability, least amount of risk entry on a trade. Show me a picture and annotate it, TLC. You're making me use my imagination way too much. Does that make sense, Paul? So this stepped one is just the large one here. But we'll get you answers, I promise. Great question, Paul. So we use the two together to create what we call favorable large triggers, and that's when they trend on top of each other, because since we're looking for areas inside of them, the tighter they are, the bigger the advantage, the smaller the risk. That was an amazing question. Thank you. Let me see where we're at. You guys are just killing it today with all the great questions. And Zen, I'm almost to you, brother. Don't despair. Almost to you. GWC, we saw that one. I got a little sideways, I think. We saw that one, Josh. Andy, we saw the 50-50 with divergence and scolded you soundly. Miss Debbie, we saw that beautiful trade, riding the momentum, 50-50 from a good top, and you chose to trade with it. We saw all those, and now we're looking at Zorro. All right, Zorro. Are you ready? Zorro, you're relatively new. So there's a couple things that I have no idea what's going on here. And the only reason I bring this up is because, Zorro, tell me why. Tell me why you went long. Tell me why you went short, right? Tell me why you went long here instead of waiting for rule number 3 to be met. And tell me why you went long all the way up here instead of waiting for the pullback to the areas. And I love your exit, and I like your exit, and there's your momentum long, and I like that, right? And I'm imagining that that was the perfect short. And look at the pullback here, but you don't identify that that's a termination condition, right? And you don't identify that that's not inside of favorable large triggers. And the same reason that you would exit that trade, well, maybe that should have kept you out of this trade. And guys, one of the things that I'm going to do, and new users, this is going to frustrate you because you're up $640, right? So Zorro, how many times is trading into resistance without triggers through it, not even from an area, going to produce dividends? And then you do it another time right here. And I'm not saying that you can't take this trade, and I'm not saying that you shouldn't take this trade, and I'm not saying that it doesn't have its merits. But if these areas are where decisions are made, if these areas are where bounces happen, Miss Debbie, take care. Doesn't it make sense to at least give it a little reaction time to let it create a bounce and at least have something solid to bounce off of? You're trading with momentum all the way up, and I love to see that because that's the greatest advantage I think a new user can have is that advantage of a market likely to continue. You take the perfect momentum trade, and I absolutely love it. And then you take a couple that I believe you could have reduced risk dramatically and increased your profit potential by understanding the challenges here and expecting a little deeper push here, if that makes sense. I hope that makes sense. But the fact that you're going long with momentum, with direction, and doing your best to stay on the right side of everything, just respecting those areas a little bit to potentially create a bounce will probably pay dividends in the long run. All right, Zen Trader entered below the yellow dots. Get out at the blue line if the trend reverses. I like it. What market are we trading here? Crude oil at 6:53 a.m. All right, so I'm going to go to my crude oil chart. And Zen, are you in here? I'm going to ask one favor real quick. And this is just for you. Since we use two charts, if you show me two charts, it's easier to give you great feedback on your entry. But what I'm going to do, because man, I appreciate that you're posting and I don't want this to be a negative for you at all, is I'm going to back up. Can you tell me what time zone you're in on your computer? Just so I can find it. Pacific. So 6:37 is actually 9:37. Is that right? Your computer is set in Pacific? So I believe this is going to be your entry. So let me scroll back and let's see what the circle looked like. Awesome. So my chart, Zen, had a fib. Yours didn't. Probably because you're in a different time zone, different midnights, different stuff. So we've got two options on this one. And first of all, let me say the momentum is great. I love it. And the path is down. I love it. And you waited for the pullback. Amazing. And the only challenge on this one is it could have gone from these one-to-ones and it could have gone from this fib. So I'm assuming, Zen, you said, egads, it may go up here or it might go from here. Let me get it back below the one-to-ones and then I'll take the trade. And I'll take it all the way down to Fibonacci support. And that was right where it went. And Zen, the only thing that I might say to you is that you could even get in a little closer to the one-to-ones if you wanted to when it starts to trade back below with these split triggers. And it'll create an opportunity for you. Great read, dude. Great read, great momentum, great awareness of the challenges. Really nicely done. Welcome to Nexgen. And the cool thing is the more comfortable you get with this, the more you're going to refine that into higher profits and lower risk. So great work on that one. Thank you for posting. And Jen, you say wild horses couldn't keep me out of this one. Odds favorable, clear path, get in and ride that mofo all the way to trouble. Nice job, Jen. Can anybody find anything wrong with this trade? Odds favorable, clear path, right to resistance inside of favorable large triggers, and it just went. And Jen, you got a second divergence, but this was such a good look, you stayed in place. No, Paul, never was. And then when this divergence printed, the smalls and large were below these, so there was a reset, and you just held it. So that was your first one. I love this trade. Never in the Navy, Paul. I tried to join the Army not long out of high school, and they didn't want me. And that was it. That was the end of my seeking to serve. I went on to drink and bartend from there. Were you in the Navy? And if so, thank you. Some of my best friends were in the Navy. Some of my favorite tattoos to do are when you guys get the ones that are meaningful, when you guys get the shellback and the swallows on the chest. And man, what are some of the other ones? The roosters and the pigs on the feet. Those are my favorite tattoos to give people when they're actually Navy and they do them. And then odds favorable, 50-50. And this is just, oh, my way of speech. My lack of a filter. That may be it. Yeah, sorry. It's not, guys, I'll tell you right now, my wife tells me all the time I'm an HR nightmare. And I don't mean to be. I have good intentions, I promise. But we're all human, right? And man, I didn't even see who posted this one, but this is a beautiful example of a momentum trade. When everything is screaming, let the triggers break the area, sell the pullback, and ride that thing down. Who was this? Because virtual high five. What a great looking trade. Even if you didn't catch it, the fact that you annotated it so you'll catch it next time, Andy, beautiful. Beautiful trade. Beautiful setup. I absolve you of some of your sins from the day. Smalls through, 50-50, bad bottom. You wanted the trade, but you waited when the smalls turned. And then, Jen, do you remember a 50-50 from a bad bottom is less likely to work. And with split triggers, it creates problems. I love your patience here. And the cool thing is that maybe you get a reversal bar and you take a shot, but not just jumping in when it isn't perfect. You guys have to celebrate these victories when they happen. You have to take a second and go, man, that was freaking awesome because that wasn't my best trade and I chose not to take it. And the money that I didn't lose is the money that stays in my account. And I love it. I'm such a huge fan of those. Falls on the right side of the large momentum. Watch the 5 chart when the third divergence printed. You were out for a $25 loss. So setup wasn't good. You jumped into the trade. You got out with a $25 loss. So where did you jump in? The first circle, Rob? Instead of the pullback? Take care. You don't know? So Rob, one thing that'll help me help you, and let's go to the ES together and we'll find it real quick. But one of the things that will help me help you is me being able to see both your entry and your exit. So your entry, let me see what the timestamp was. That was yesterday, 11:44. I can scroll. Let's find it and let's talk about it. Woo, that's back there a little bit, isn't it? So at 11:44. Oh, that noon fib thing got you too. But let's take a look at it. Let's see if somewhere right around here there was an entry at 11:44 yesterday. There we go. So Rob, if you had taken the first entry at the area of resistance inside of favorable large triggers, you're in it at 98.75. And this actually goes all the way down to 95.25, which means that you made your $100 and maybe it gets you break even. But that turns into a $100 trade instead of losing 25, right? And I think what happened based on your first circle is you jumped in down here rather than waiting for the pullback, waiting for that retracement to the area inside of favorable large triggers. And that's okay. If you're going to take this as a momentum style trade, if you're going to jump in with nothing more than momentum, Rob, it's okay to get out when that momentum stops, when you get that close on the wrong side. And then just wait for the next best trade. I don't disagree with your entry at all, especially based on this chart. This is a market that said I'm more likely to scream down than give you this reversal bar. But when it gives you the reversal bar, and this is where understanding what kind of trade you're in gives you the ability to manage it accordingly. So you took a momentum trade, and it was a good looking momentum trade. But when that momentum went away, you had to be willing to exit it because your advantage, the whole reason you took that trade, the advantage then went away. Does that make sense? I love the trade. No, you're doing great, man. 50-50 with divergence, and damn it, it lost. Every 2 hours, Muser, it lines up. Every 2 hours, your fibs, every 120 minutes, your fibs update. They recalculate 100%. Who was this? Andy, 50-50 with divergence. Not a good bottom. The small triggers got through. So Andy, let's use that for the lesson. The lesson is when it is not a no triggers through termination. And this isn't. It overran. We're not going to call it a good bottom. And I know that that's nitpicky, right? Dude, Mark, it like barely went. Yeah. new users, be nitpicky in the beginning. And if this were a good bottom, let's talk about one other thing real quick. If this were a good bottom, and let's just say for the sake of argument that it was, this good bottom increases the likelihood of this fib to break. By the time I come from this 350 fib and get all the way up to 55, that good bottom's already done what I want it to do. Does that make sense for you guys on these 50-50s? A good bottom doesn't guarantee that 50-50s work forever. This termination that pulls everything down helps me get through on this 50-50. There's nothing to talk about, Rob. It's just at 8, 10, 12, your fibs update. Your software recalculates, and it may add fibs. That's all there is. There's nothing else to know about it. But that right there, small's on the wrong side. That's a double whammy giving up momentum. And compare that to the one before. You did enter an area, but you had 2 losses in momentum on areas that weren't broken. And Andy, I hope you see that. But the cool thing is, man, is we found your thing, right? And Andy, I don't ever give trading advice, and I don't tell people how to trade because that's not my business. I can't do that. But what I can say, and maybe you'll get something out of this, is that I have seen you trade against divergence on a 50-50 trade no less than 4 times today, and you haven't won one yet. So maybe we're recognizing a pattern. Maybe we're finding something that's pulling that success from you today. But what I want you to do, Andy, is keep taking them until you don't, right? And keep annotating them that, man, this is my thing. My thing is breaking this rule. And then whose chart was this? So 5-1 divergence says no short trade. And you better be new. Man, you guys are keeping me busy. I love this. This was Paul. Is that right? Let me double check. All right, Paul, how many divergences on a small chart does it take to constitute a termination condition? So let's go back to the rules real quick. How many divergences on a small chart does it take to constitute a rule's not met, a no trigger? It takes 3. One thing you didn't do, Paul, is this a 50-50 or is this an odds favorable? Is this a high probability or a medium probability? I can't tell from just one chart. Hell, I don't even know what market it is. So you're not being fair to me on the chart read here. If it is a 50-50 trade dictated by the large chart, they are the same links, Paul. I do that sometimes. Is I'll post one and then I go to post the other one, but it turns out it's the same link. And that's what happened on this, I think. Hold on. Or maybe it was the 15 comments in between it. So it was a 50-50, no divergence. The KISS plan says no. There you go. Perfect. Grade adherence. And I'm not sure why you gave me 3 days of gray screen, but 50-50, 1 divergence, KISS plan says no. It never made an area inside of favorable large triggers anyway. And then strength of triggers says ignore divergence and into a termination condition. So, okay, so let's cover this. This is great, Paul. This is brilliant, and I absolutely love this. 50-50, the checklist says don't do it. The rules that have been proven to win more than they lose, the rules that optimize your chances of success, the rules that increase the likelihood of you being victorious say don't do it. You say, F them rules. Strong triggers. And this is where I bring it back to you guys. If you're not winning more than you're losing, if you're not ending your days positive instead of negative, if you're struggling with a couple concepts for consistency, it's okay. It's okay to follow your checklist. It's okay to embrace your rules. And then the other side of that, Paul, is it's okay to say, well, with strong triggers, maybe I trade it anyway. But then the second half of that one, guys, and we do this in half truths, is this big gap says strong triggers. This returning to the trigger says that it's slowing. This going inside of the trigger says that it's dying. So what happens, Paul, is maybe you have that great huge gap. Maybe you're coming from a good top. Maybe the smalls have smashed and you say to yourself, I've seen this enough to take this trade and feel comfortable with the divergence. But until you get to the point and you piece all of that together at a moment's notice and you do it accurately, maybe following the checklist is your best plan of action, just to build those reps until it becomes second nature, till you piece all that together really quickly. And then Ron says momentum for the win. Smalls outside of the large, price clears trouble, smalls outside of the large, quick hit, easy money. I love this trade. Ron taught me this trade, guys. True story. I never took this trade, and I absolutely stunk at it when I first tried to do it. And then Ron taught me how to catch these little blips. And I still use an extra chart because I'm not as good at it as him. Because he put more time and effort into finding these trades than I did. And I lost a lot of money trying to be Ron before I was ready. Hey, Jazz, take care, man. All right, Zen. Zen says, weak triggers at a fib is bad. 3 divergences in the same price range isn't great. But weak triggers at a fib coupled with 3 divergence and things rolling sets me up for a potential trade. And then the only challenge here, oh no, your entry was at 01 down here. So when it broke above Zen, you got in and you're making money at the areas. And I'm not sure why that says entry, but that's beautiful. 3 divergences confirm the overrun. You let it roll. Looks like you took your entry once you started to clear trouble and you got out at trouble. Beautiful. Is it a high probability trend trade? No. It's creating an expectation based on a chart read and finding a way to capitalize it with the least amount of risk. And Zen, I'm not completely sure how long you've been with me, but you're really doing well. And then we saw this one already, Zorro. I gave a lot of feedback on it. I hope you got it. And then one for the road, Ron. Clear path, momentum, odds favorable. And then there's that. It looks exactly like the last one, Ron. Second day's in. Great job. You're taking a little bit harder trades, but you're reading your chart really well. And the cool thing is that there's no reason why you can't continue. And if I may offer just a little bit of, not advice, because I don't give advice. One of the things that I want you to be able to do, Zen, yeah, they do, Ron, is I want you to be able to talk about your chart reads. So I would love to see, for your ability to do this same thing over and over. Ooh, hold on. I would love to see you annotate your chart a little bit. To say weak triggers at fibs may reverse the market. No more shorts, right? Just talk about what you're seeing. And then over here, taking that beautiful essence, 3 divergences in the same price range may reverse the market, right? So all we're doing is we're using the language that creates repetition, that creates recognition. And then, like, go with, I like this, enter when the trend turned green, when magenta line turns into the green. So you could even say, let triggers roll. Now trend up on small chart, clear trouble, take entry and hold to termination on large chart. And now what we've done, Zen, is we've created this roadmap, right? I love your trade. I think your trade is absolutely beautiful. And I think your trade is so nice. Let me open up my library real quick. Let me find where I took pictures this morning. I drove my brother absolutely nuts this morning with so many pictures. Was that it? That wasn't it. Nope, that was me whining to my brother about what I wanted to see. That was a trend trade. That was TLCs. That was a trend trade. That was scissors opening, 3 divergences. Man, I take a lot of pictures, ladies and gentlemen. Hell, I don't know where it went. I think this was it. Looks a lot like yours, doesn't it, Zen? 3 divergences, termination, get above the trouble, take it to the problem spot. So Zen, what you're doing is you're creating an awareness, right? And you're establishing this trading plan for yourself. And you and I did essentially the exact same thing. I've been doing this for 3.5 years. You've been doing this for 2 days. And I think this is one of the great things about what we do here at Nexgen is it gives you the opportunity to capitalize on everything that I've done, every mistake that I've ever made, every challenge that I've ever had, every pattern that I've ever recognized. Guys, you get the benefit of all my experience. And the cool thing is I've got the benefit of 27 years worth of my brother's experience that allowed me to be such a great chart reader as quickly as I was. And now we're doing the same for you. And it's very much, it's a trickle down. So via me, you're getting 27 years of John Novak's chart reading. And Zen, you're doing it beautifully. And the only reason that I talk about annotations, guys, is you've got to be able to do it again, right? So I see an entry here somewhere around 952. And if I go back, I can't see 952 over here on the large chart. And I can't see 952 on the chart over here. And then I've got a second entry at 1014, somewhere around 60, which is right into termination conditions, which is right off of one-to-ones with stranded sellers. And I'm just curious why, right? And I think this was you, Zorro. And if I'm not mistaken, we probably had the termination, the second lower divergence, the beginning of momentum, and you let the small triggers break the areas and sold the pullback with the momentum and the odds favorable on the range chart. And because of that momentum, you were able to ride it all the way down to Fibonacci support. And it looks like a beautiful trade to me, and it looks like the perfect momentum trade with all of the rules met. And I want to make sure that you can repeat it, because I'm not going to lie to you, it's 32 flavors of kick-ass, and there's no reason not to. Good bottom-ish, I don't know what that means. That's a good bottom, Haji. That's odds favorable. That's the loss of momentum. And this loss of momentum, coupled with 2 divergences and small below the large, is a loss of momentum. You get in at the area just above or just below. You're at the back of the large triggers, and the market drops, right? You don't have an area inside. They're beyond. You have two divergences. You have weak triggers. Hey, take care, Ron. Oh, did we? I don't think we had a storm here last night. Um, if we did, I slept right through it. I don't think we had one. We had a lot of clouds lately, but nothing much. So, Haji, do you remember the split trigger idea? When it's not perfect, it's okay to wait for a little confirmation because your exit is happening on the confirmation. I appreciate that, Ron. Yeah. And I love the look on your large chart, man. And I love the idea. The only challenge, and let me show you a cool pattern. Haji, you're going to love this. When I get a pivot stop out here, right? And this chart still says we're going up. I want you to see where the low pivot is here. When I get a pivot stop out here, but my rules are still met, my expectation is that this second divergence will take out this pivot. And if you go back and study this look, whether it's a large chart or a small chart, you begin to create these expectations. And Haji, what it does for you is it has you going, all right, I don't have momentum. I've lost it twice, but this really says up. And then down here at this pivot stop out, I've got the support. Maybe it's going to push a little lower. Maybe I'll be a little patient. Maybe I'll wait for that reversal bar, or at least let the pivot stop out happen and let it really focus on its way up. And it'll motivate you to wait for the reversal because you exited the trade right when it started getting good. And that's where creating these expectations. Your large chart read was awesome, dude. But your small chart said, let's be a little patient. My triggers are split, two divergences. And you'll find that pattern repeats itself. And let me show you here in the client trades. Two divergence on the 5-1. There's your second divergence, even not a pivot stop out. It creates the pivot stop out. And I think that there's a couple of those in there. 5-1 PSO creates the PSO. And guys, this is just a cool pattern that more and more you'll be able to incorporate into your trading. When the entries aren't perfect, you'll be able to add patterns to it. And I think it's pretty awesome. And then, Steve, yes, I do use the 21 range on the NASDAQ. So great picture, Haji, great read. And then Jen, why? So everything is up. It pulled back to the midband, for sure. You didn't want to get in here, but once it started up and cleared trouble with momentum and everything up, you thought it was appropriate to buy a pullback with that momentum to go to resistance? Beautiful. No. I love it. Love everything about it. I just want to make sure you can repeat it, right? Momentum, mid-band, held support. But you got above trouble, right? You got above that divergence high. Your entry's up here where you clear trouble. Wouldn't that be awesome to put on the chart? Otherwise, maybe you get in here below the 1-to-1s. Maybe you jump in here. Maybe you fight something. And so I love this trade and great patience and awesome momentum, and that's how you do it. Just annotate so that it's repeatable. And TLC says, strong triggers, clear path. I'm not going to hold forever. I'm going to get in with momentum. I'm going to get out at resistance. That's your trade right there. And then when resistance clears and nothing blinks, I'm going to do it again. TLC, I love it. Jen, you spell any way you want to spell. But guys, I talk about annotation not to nitpick you. Um, Steve, I didn't even talk about NASDAQ today. You didn't post a picture and ask a question. Um, but I find that the detail makes it repeatable. And that's the goal, is to make it repeatable, to be able to come in and do the same thing over and over and over and over and over and over and over until it becomes second nature. Steve, so for what I teach in the room, I don't need a 21 range. I just don't. I teach high probability trend trades. We talk about the 50/50s. So if you guys need me to expand beyond the two chart process, all you have to do is drop a picture in there. And I'm more than happy to talk about it. And I love to talk about it. And guys, I'll always share. Um, I will always share anything that I'm doing with you guys. But a lot of my stuff is based on chart reads. And if I go back to Exhibit A, let me find that one that I posted in the room. And before I say anything else, guys, y'all are freaking amazing. You kept me so busy with your chart reads today that I never even had a chance to go through the live market, really, that I didn't get to spend much time in there. So I apologize for that, but way to go. And Jen, that's why I talk about it. You didn't realize that you had done such a great thing, but now you can make it more repeatable. And if you look at Ron's charts, let me see if I can find one real quick. The one thing that he always says is price must clear trouble. Price must clear trouble, and then he'll look for the opportunity to capitalize on that trade. So by putting that on there over and over, then you're good. It's good stuff. And then hold on. But yeah, Steve, I'll answer any questions. I promise. All you have to do is ask. And I would love to answer any and all questions that you have. And then Haji, and guys, I don't mind running over. We can run over a few minutes today. Not momentum. Why is that a momentum trade, Haji? Momentum. Steve, the 21 range is a confirmation of momentum for me. That's all it is. It's a confirmation chart. It doesn't get me into anything. It doesn't talk me into anything. I literally use it for a confirmation. Haji, is that a momentum? Look. Small triggers inside of the large triggers? No. That's anything can happen, brother. The fact that it did this, it's okay. And I'm not saying that there might not have been a trade there, but we can't call it a momentum trade. And then TLC. So TLC, the NASDAQ is a 34 and a 13. Those are your large charts. The ES is a 13 and a 5-1. So on the ES, on crude oil, on gold, on RTY, an 8 range is the one that people are using. And then for the NASDAQ, that's where the 21 comes into play. And then just so I can do this real quick,